Good afternoon, everybody. Hopefully, everybody has a cup of coffee ready to go on a Sunday afternoon where it is absolutely freezing in the Northeast. Freezing, I tell you. Maddie is somewhere. I would like to think he is pouring himself a nice cup of coffee and then moseying on over to the computer. So he should be on any moment. Before we go any further, as always, please read the disclaimer. I am not a financial advisor. I am not your financial advisor. I have no idea what your situation is. I only make investments for myself, nobody else. I do a ridiculous amount of research. Anyone who comes on this show, anybody who says anything, it's their own personal opinions. So please pause, read the disclaimer. Without any further ado, let's get started. And he comes in at the perfect time, everybody, right when the disclaimer is done so we can get down to business.
Steve, you can't wait 2 minutes?
No, because everybody busts my chops about being late, like Tanner. So no, we can't wait 2 minutes.
Well, if that's the case, then just tell him to go find another stream to watch.
No, we can't. We are not late. We're not going to be like Tanner. We are on time. And I told everybody you were probably just pouring yourself a cup of coffee.
No coffee. Can't afford it. Too poor.
I mean, this is Sunday afternoon coffee and stocks.
Oh. Well, then I messed up, Steve.
Thank you, everybody, for being here. Chels, thank you for being here. Hopefully, everybody had a great holiday. And right around the corner, we have New Year's. Rambler, Rusty, thank you for being here. All the regulars. All right, Matt, got some announcements.
It feels like there's like a filter on. How the hell do I get this thing on? Is there a filter? No filter. Why does it look like there's a filter on me? Anyway, it looks like there's a filter, Steve. Okay, perfect. Yeah, maybe it's just the bright window that I have in front of me.
Could be the window.
Yeah. All right, so we have two announcements, Steve.
We got two announcements and something to show you. I think you know one of the announcements, that I became a shareholder in Nebius. I think you know that, correct?
Oh, is that an announcement? Oh, okay.
It was one of them. Second one, I am now officially a shareholder in VJ.
Uncle Steve.
Officially a shareholder in Venture motherfucking Global.
So give me your synopsis. Everyone on the channel wants to know.
All right. Initially, I didn't like the valuation. Initially, I was worried about headline risk from a political environment. I think we have at least 3 or 4 good years ahead of us. And at this point, with the amount of data centers that have been put up and the amount of backlog, I don't think that anybody can win on a platform for re-election on the idea of two things. One, going backwards on crypto legislation, and two, going backwards on energy, because it is pretty much proven that we just can't put up enough solar and wind for the amount of energy that we need. And it's a sum of all fuels at this point. And the only logical step is to reduce the amount of coal that's utilized and move into renewables and natural gas as bridge fuels. And I do think that we have several good years. I looked into the lawsuits. They don't scare me nearly as much as what people made them out to be. I think one of them could potentially, and this is just me and my research, I think one of them could potentially be about $1 billion. The other one may be 100 million, 200 million, somewhere in that area. VG has a lot of debt, but their EBITDA is very strong. It's growing. And when I look back at the previous EIA projections for the amount of natural gas that's produced in the US and the amount of nat gas through LNG that is exported through 2050, and these projections came out during a Biden administration, which was not necessarily the most friendly to traditional energy. It looks like we will triple to quadruple our net exports on LNG over the next 2.5 decades. I want to be in venture global over next at this point, only because everything's up and running. Expansion is going to happen quicker, in my opinion, and there's less unknowns other than the lawsuits, which I don't think are business killers. So for those reasons, I think we've seen a bottom. I wanted to wait until it rebounded just a little. Maybe we didn't see a bottom, but I do think this directional movement is a signal that just under 6 was a bottom, and I am starting to build my position now.
Impressive, Steve. That's why they pay the big bucks, my guy.
Listen, I'm just trying to learn from you.
Yeah, I think you hit on some key points there. I mean, the United States is exporting about 110 MTPA.
Matt, I'm good. I gotta stop you for 1 sec. Hey, just so everybody knows, okay? I mark off that this is not for kids. I'm not going to filter myself. I will try not to swear, but if a swear word comes out, I will not apologize for it. Matt, go on.
What did you say?
I don't know.
Somebody giving you crap? I didn't see it.
Yeah, somebody's saying don't swear. Don't watch the stream. I don't know what to tell you.
Don't watch the stream. Go watch Tanner or something. The Superman of the North.
I talk how I talk. Sorry.
He's as Uncle Donnie would say, he's a New Yorker. He talks the way he talks. But no, I think you're right. I mean, if you look at the major players in the industry from the U.S. side, Cheniere is obviously the front runner in terms of who's been established in the United States from exports. So at the moment, they're the market share owner, the majority market share owner, I mean, and that is being now challenged by the 30 or so MTPA, maybe even closer to 40 MTPA of exports that now Venture Global has, which is getting us closer to the 110 MTPA. But I think you're right. I mean, the way that I view this is Venture Global will eventually be exporting over 100 MTPA, potentially closer to 140 MTPA if you're able to exceed all the capacity that they expect. But in terms of nameplate capacity, it'll be about 100 MTPA. And that alone, as you stated, will be about 1/3 of the capacity of exports by the middle to end of next decade, if not closer to 40%, depending on where you end up. I agree with you. We're going to go from probably about 110 MTPA to closer to 300 by the end of next decade, maybe closer to 350. Then you also have next decade, the actual company that will have close to a 45 to 50 MTPA facility, if not larger, by the time that is done. So that'll be interesting to see. And I agree with you. And I think that you did this well with respect to kind of understanding where the companies are in their business cycle, right? Venture Global is obviously producing revenue. They have 2 facilities online. They're building their third. Versus next decade, they have 1 facility. It'll be a larger facility than anything that Venture Global has to date, but isn't even producing yet. So it's tough to be able to get yourself. And I was looking this up earlier because Venture Global, some of their debt, not all their debt, but some of their debt got re-rated as investment or just below investment grade, which is a good thing. Meaning you can lower interest rate payments on it or whatever if you refinance it. Then I was like, well, let me think. I was like, I haven't really looked at this for next decade. Next decade, obviously, is in a situation where they're not even junk rated or non-investment grade rated. They're not even labeled by S&P and by Moody's because they have literally zero income coming in. So from that perspective, they say we don't even want to touch this with the 10-foot pole, and that's why some of their debt is actually at a 13%. 13% whatever in the interest rate, because they have to basically go to those sorts of lengths to be able to get the credit and actually be extended debt, period. So interesting sort of scenario. But yeah, I think it's right. I think people need to kind of observe and think about how you describe things. Sometimes it's not just about finding the ticker symbols, but actually understanding where these things sit into your portfolio, because it's very dependent upon where and how and where things are in their business cycle that you fit them in.
So I want to show you something from the EIA. I'm sure you've seen this. You do more research on this industry than I do. I do not like that the EIA does not update this specific slide anymore. And if they do, I certainly can't find it. This is from their 2023 Energy Outlook out to 2050. And the two graphs that I'm interested in are the middle one on the right. So in the reference case, it had dry natural gas production increasing 20% or so, 15 to 20% through 2050. And on the LNG exports, it had exports increasing in just the reference case roughly 3x. Now, in a high oil scenario, these went significantly higher. And I would argue that we're in a high oil scenario given the amount of energy that we need to power everything that's going up. And when I look at this was in the middle of an administration that was not favorable toward traditional energy sources. So when I see this and I think about where we are in the cycle, where we need to be over the next several decades, I do think that even if our consumption stagnates globally, we're going to need more energy. And I don't even believe that this chart is relevant anymore on the left, because I believe that our consumption is going to increase over the next several decades. We're just going to need more natural gas. Our allies are going to need more natural gas. And we are the largest gas producing nation in the world. So I think exporting is going to be really good. The question is a shift in the political climate coming in 2029? That's the only thing that I can't handicap for. But even if it does, how robust could it actually be? Because with all the data centers going up, I just think that this is going to be a situation where even if we get a political shift, they're not going to be able to be as bearish on traditional energy as it once was.
That's why they pay the big bucks, Steve. I'm telling you. So what else are we buying, Steve?
Before we get to that, Matt, you did not see the stream last night.
No, I was only in the chat. I was,
right.
As you guys can tell, I'm not in my normal location. I'm visiting family, and I was going to do two streams yesterday, but because 50 days out of the year I focus on business, I decided yesterday I ended up spending time with family instead.
I'm going to play you something. Everybody, this is only going to be one to 2 minutes. We're not going to spend a lot of time on it. Don't worry. We will get to a bunch of stock stuff in just 2 minutes. So, Matt, I may have ventured into Alex's stream during my stream with Amit. I may have bought an entire box of Phasmatal Flames. And Alex may have opened it live. Alex may have opened it live. We may have watched him open it, and then he came on and rewatched something. Are you ready?
What did you get, Steve?
We're going to miss is going to be New Year's Eve. Everything else is going to be back to normal, though. So it should be fun. There's a hair across.
Yeah, I hope you don't get hit for the music.
Alex, I want to stream you opening. What do you mean? We're doing it right here. This is it. This is yours. Hold on. He has me on mute. Hold on. Let me type in the chat real quick.
Did I go back too far?
Steve, just press the arrow button.
No, you're almost there, man.
Did he not know this was
it? After hours, Steve.
Boom! Steve! We got it! Is
that the Charizard?
Dude, we got it!
Dude.
That's so epic.
Aren't they like $500, $600?
Dude! No!
There's no way.
You got it, dude.
Alex, was that the biggest pull of the night?
We actually pulled another one tonight, but yeah, this is like these are both the two biggest pulls of the night. Yeah.
Okay,
It's like a $500 card.
So
yeah, I was gonna say I think it's like a 500. Are you gonna get it rated?
yeah, so it's going for 480 raw, and if it grades at a PSA 10, it's going on eBay for between 1,800 and $2,000.
And would you keep it or would you sell it?
I'm not interested in selling it, I don't think, but I'm definitely sending it out to be graded, and we'll
awesome.
see what happens. I mean, if I do sell it, I'll probably just put the money just right back in Fast Metal Flames boxes, and we'll just rip all of them and gamble. So we'll see.
That's insane, man. Because how many boxes do you have now? I got 2 by accident.
Of Phasmatal, I only bought 2 of them because it was much harder to get your hands on them. They're starting to really be more available now. So
I accidentally I messed up because I'm an idiot. I tried to buy one of each, and I took a couple iterations off, so I'm trying to catch up. And Phasmatal, whatever, came out, and I typed in Mega Evolutions, and I was trying to get but it's a Mega Evolutions Phasmatal Flames or whatever the hell. So I accidentally ordered it a second time. So now I have 2, and I still don't have Mega Evolutions, the original base set. So I still need to get the base set. But that's awesome.
yeah, so before the stream, Rambler was actually hanging out in Alex's stream, and I bought 8 packs because I wanted to pull that card. And then Amit and I were talking about the card convention we're going to go to. So I was like, screw it. So I went in Alex's stream. He was about to close up shop. And I would just start typing in the chat, open a box, send me a text what I owe you, and we're going to watch it. So we cut over to his stream and watched it live.
That's insane.
My reaction was pretty crazy in the stream. I'm not going to bore everybody with it. But because a lot of people here saw it last night. But since you didn't see it, wanted to show you the craziness that went on last night.
That's insane, man. Why didn't you buy some 151 or something?
Because that's the Charizard I actually wanted. Like, I'm lukewarm on selling it. I don't know if I'm going to.
Nah, you told me about the Charizard from a long time ago, so I feel like it was you spoke it into existence.
Yeah, good. So I actually think that this one's going to be more valuable. And PB, this is what I'm going to say. Thank you for the super chat. I can't tell you what's a good price. You're going to need to go on a site like Card Ladder or Sports Card Investor. I know that at one point they were going for $3,000 when there wasn't a lot of them. I can see that this card comes down in value because there'll probably be way more PSA 10s of it in the next couple of months as PSA continues to grade. So I don't know. I couldn't tell you if it's a good investment or anything. I got lucky with that hit. It's a very low probability hit. I don't buy PSA graded cards for investments. I only buy sealed wax. So just did that for fun last night. So Maddie, are you going to buy some more sealed wax now?
I still need to buy Mega Evolutions, the base set, and I was trying to think what else I need to buy, but I have a good bit that I've bought recently. So,
all right. So stocks. What are we looking at? We're going into 2026, and a lot of people are wondering what our thoughts are on what's going to happen in the market, how we're positioning ourselves. I'm not sure if you're around on New Year's Eve. I am going to host a live stream at 8 p.m. for everybody who's not going out on the town. But let's have a little pregame today. Where are you thinking about adding capital to, and what are your themes for next year?
US LNG. I'm pretty much hyped up on that. I would like to get a robotics play, but I can't find the right one to get my fingers into. But I believe that the second half of 26 will be a right time to start adding some serious capital to Bitcoin and Ethereum, and maybe even MicroStrategy and BM&R. And so I'm kind of waiting for those. If not, maybe Coinbase and Robinhood, depending on what happens. Robinhood maybe not so much with it coming down because it has auxiliary streams of income, not just necessarily from crypto. But I think Coinbase is going to get hit pretty big. So there's that. But yeah, other than that, I mean, I still have a lot of catalysts. You know me, like I have a lot of catalysts in Rocket Lab still to play through. I have a lot of catalysts and a lot of the stocks that I hold. So to me, it doesn't, I'm not looking really to make an investment specifically for 26. So I don't know. I know people think I'm boring, but it's worked well for me the past few years to kind of heavier focus on things. Oh, we have a visitor on the stream.
We do have a visitor on the stream. We got a visitor coming toward Matt.
And there he goes.
So I'm with you on boring. Obviously, you and I think alike with the S&P 500, so I will be continuing to move capital there because for the long term, I think it's a great play. I do think that we are going to get a couple of catch-up trades, one of them being Salesforce. That's no secret from what I've been saying. The fundamentals are so strong compared to the valuation. So that's a name that I will be scaling into. The venture global position, because of my stance on LNG, I do think that 2026 is going to be a year where we get a everything rally. Unless something happens that I'm just not handicapping for at the moment, all the economic projections coming out of the Fed are creating a very bullish setup. Now, that doesn't mean the big tech is going to run away. I do think financials are going to catch even more of a bid next year. I believe that they are going to expand EPS because originations are going to go very high up as rates come down. I'm going to make a weird projection that we don't get a rate cut until May. Now, maybe that doesn't happen. I mean, we could get one in January. But if we don't get one in January, I would be very interested in what Jerome Powell says at the FOMC meeting, because I feel like where rates are now, the majority of the Fed can live with this level until a new Fed chair comes in. So we'll see. Hopefully that's not the case. I would like to see 3 to 4 cuts next year, even though the majority is calling for only 2. I think it's very important to get rates under 3. I think we're going to see a second half of the year where we could see a good retracement in the first half. But in the second half, I believe it's going to come alive with an unlocked housing market, with mortgage rates in a much more non-restrictive area. I think we're going to see the housing market catch a bid. That's why I've been building out QXO. Oh, look at that.
Oh,
we got a third person.
We got OnlyFans for cats.
OnlyFans for cats.
Hey, buddy.
I love it. I love it. So
I was just hoping he didn't sign me out, so we're good.
That would have, you could have got back in. So there are a couple of companies. Starbucks may be able to turn it around. I don't know, but I'm really interested in this Netflix deal because if Netflix does get Warner Brothers, it's interesting. If they don't, I think the numbers don't make sense. But the one that I think is being overlooked is NVIDIA's ability to continue to appreciate. I don't know if we're bullish enough on NVIDIA. And then if I had to pick some more out of the big tech, Amazon and Meta. I think they both do phenomenally well. I think Apple cools off next year, and I think Alphabet and I think Apple both cool off next year.
Alphabet and Apple. What about Amazon?
Amazon and Meta, I think, do very well next year.
Amazon, Meta do well.
Yeah.
But you think, yeah, I mean, Alphabet's been run so much. So it makes sense that you'd have a little bit of an opportunity for prices to kind of catch up, or sorry, not prices, the stock and the company itself the company to catch up, the stock kind of relax a little bit going into 26. But I'm with you. I think that we'll have an optimistic. Do you have a claw, buddy? I thought we got rid of your claw. But never mind. It's just a piece of fur. The thing that I'm most kind of curious about is the beginning of 26. If we continue to see a deterioration of unemployment going in the wrong direction, which we've seen now for a couple months, and if that does persist in terms of putting pressure on the Fed to do some more cuts because people want action. But I'm kind of with you. I don't see a cut in January. I think we've had pretty substantial cuts now, I guess, or 2 cuts now in the past couple months. I think that the Fed is going to play it easy. And did you follow? Or did you mean to go down? Anyway, so I think that they're going to try to see what happens with the economics data before they make another decision. So I'm with you. I don't think that we'll have another cut until at the earliest March. But I'm kind of less optimistic on how quickly things move back to housing. I'm not saying that things are going to be as slow as they have been, but I guess I wanted to get your thoughts because you stated housing in there. Are you thinking that there's going to be like a large reversal overall in a spring period where things just open up, or are you saying just better than it has been, and so that's going to add some fuel to the fire in terms of a strong U.S. economy? Because I don't see mortgage rates dropping below 5%. I mean, I still think that they're going to be in the high fives at best, because I don't really see interest rates on the 10-year going below, I don't know, 3.5, and it would make it hard pressed to have spreads between the 10-year and 30-year mortgages, which is generally anywhere between 1.5% to 3%. Drop that then below 5%, which in order to get a really big run, I think in movements in the housing market, I think you would need below 5%, because housing value has gone up so substantially that in order for people to actually start moving things, the interest rates on mortgages would have to come down expansively, which I don't foresee. I've actually been humbled by because I have multiple properties that I want to refinance, and I've been humbled by thinking that these rate cuts are going to have more meaningful impact to the 10-year, and they have not. And the only thing that's really come down is the spread. So during the midst of 2022 to 2023, when interest rates were rising, it was really the 10-year 30-year mortgage spread, which went from like 1.5% to all the way to 3%. So basically, once you got to 5.5% plus on some of these mortgages, you were getting like 8.5% mortgages at their peak because of the spread being so high. Now the spread has come down to slightly below 2%, so you're able to get a little bit more favorable. But still, you're in 6% for most 30-year mortgages for most scenarios. So I just wanted to get your thoughts. Do you think it's going to be like a mass run on housing, or do you think it's going to be just like a slight increase?
So before I answer your question, the iron oxide, thank you very much. How much cash percentage should I have going in 2026? That's a personal question. I can tell you that I like cash, and I like cash. That's all I can say. I think cash is king. and I don't subscribe to the idea of cash is trash. Tariq is investing. Thank you very much. I think it's the other way around. I think we get 2 cuts and rally for the first few months and start coming down when the new Fed chair comes, inflation fears, and midterms will give us a red summer. So, good take. I can see a scenario where that happens. So, where I'm at on your question, Matt, is I think Powell is going to play it safe in January. Maybe he cuts one more time before he leaves, but I wouldn't be surprised if they don't cut until a new Fed chair comes in. When I look at CME Group, they're indicating that the most likely scenario for the end of 26 is for rates to come down by 50 bips. Okay, so they're projecting a 32.5%, so basically a third, that you're going to get 2 cuts. But you also have another 40% percentage chance of more than 2 cuts for next year. And then if we look out to 2027 end, most likely scenarios that we have 3 cuts from now till then over the next 2 years. But then we have another 32% saying more. I think when we get a new Fed chair, it's going to give a lot of conviction to the doves. It's going to give the doves a more powerful voice because regardless if it's Waller or who's the other guy that I kept saying that? Shit, I forgot who the other one was, I thought.
I'm right here.
No, not you. Who was the other person I kept saying is going to be Fed chair? Not Michelle Bowman. Anyway, can't remember the guy's name. Warsh, yes. Warsh and Hassett. So it's going to be one of them. Probably Hassett or Waller. But I think that they're going to give a large empowerment to the doves. And I think that the sentiment on the Fed is going to change. And it'll shift more toward we need to make sure unemployment is destroyed. And that's more important than potential inflation of 3 or 4%. Inflation's already done. It's likely going to continue dropping. As long as we don't see oil go past 65, I think inflation is going to be at a good place. And if we get 3 rate cuts next year, I think that mortgages will start to subside. But in 27, we'll likely see mortgages get down into the low 5% range, which would be good for everybody. Are they as good as what they once were? No. But that was an anomaly. But they'll be low enough where at a low 5% range, people would start refinancing and we're likely to see more inventory on the market because it's no longer 7.5%, 8.5% rates. And you want the housing market to be unlocked because that will stimulate the economy with construction jobs, remodeling. It'll be great for the retailers like Home Depot and Lowe's. Be great for contractor jobs, plumbers, electricians. So I think it's an important part of the economy that needs more activity right now. It's been stifled for too long. And unfortunately, we were in a situation where people were able to get mortgages at sub 3% levels. Mm-hmm. There's really no motivation for them to exit that unless they're moving for what is this, Ian? I am so sorry, Matt. Why is Steve gaslighting Matt with this not you? There's a dark side to the Cookie Monster. What did I say, not you?
I said you were saying who's the other person I was thinking for Fed chair, and I was hinting it was your boy Mateus Mula, and you shut it down with certainty.
No, that's not what I meant.
That's what you meant, Steve. I get it.
We all know that the White House's quant is being freaking looked at. I obviously know Matt's being looked at as Fed chair. It wasn't him I was thinking of. Obviously, Matt's right in front of me. I obviously can remember his name. I couldn't remember Hassett. That's what I meant by not you. I couldn't remember Hassett's name.
Good save, Steve. Got some good media training.
No, that's the truth. I mean, the title of the freaking stream is AKA White House Quant. But
Fed chair candidate, 2026 Fed chair candidate. But yeah,
housing is a big component of the economy. And I think it'll be good in end of 26, early 27.
Yeah, I was hoping it'd be. I'd say it's been a black eye in terms of this economy.
Yes.
But at the same time, a necessary one, right? I mean, you couldn't have inflation continue to run rampant and out of control, and so you needed to do something. But yeah, I'm with you. I'm kind of curious as to see where it lands, selfishly and just in terms of getting back to normal. So, um, I don't know. It's an interesting one. So, yeah, I have a lot of skin in the game. I mean, I did some looking. I mean, it personally being able to refinance at 5% compared to where I am now would save me probably, I mean, tens of thousands of dollars a year.
It's real money.
It's real money. It's
Yeah.
legit.
Yeah, it makes the
So,
refinancing cost worth it.
yeah.
Yeah, I mean, I think you're going to need to wait until the end of 26, but I do think the rates are going to come down. I'm on a little bit of a different side. I agree that something needed to be done, and we did not start raising quick enough. I think the Fed went too far with raising rates to where they were. And I don't think that we depended enough on the free markets because when you have too much demand, companies will come in and feed that demand with supply. And I'm a supply side economics guy, and raising rates to where they were from an environment where rates were basically nothing created a false scare. And I don't think they needed to go that far. That's why we had the crisis with commercial real estate. We had the scare with commercial real estate, Silicon Valley Bank. Oh, the cat must have dropped Matt by accident. And I'll keep going with that thought where, no, Matt's back. Cat dropped you by accident?
No, I accidentally hit refresh on the wrong tab.
Ah, okay. And I think we would have been fine if the Fed just took rates to 3.5 or 4%. Coming off of such a low level, I think that would have got the job done with inflation. And let's not forget, a large part of inflation is oil at $100 a barrel or $80 a barrel. That isn't just prices at the pump, it's oil for your homes, it is natural gas, it is transports, it's input costs on businesses. So, manufacturing, transports, everything. There is a lot of different things. I think that we are, from a global economy and more importantly, a domestic economy, because of where we are, we have to really take a step back and be like, okay, if China's not going to eradicate coal, we can do all the stuff we want with traditional fuels, but it's not going to have a huge impact on a global basis. And we're actually hurting ourselves. And economically, we will make things more expensive if we curtail where we get energy from. Mm-hmm. So I think there's a lot more factors that need to be looked at. And people were folding to what was the hot topic rather than making the hard decisions. And I would rather have people making the hard decisions. I mean, look what's going on in California right now. It's absolutely freaking scary. I want to use a better word, but what's going on in California is outright scary.
With respect to the taxing of the billionaires, what are you talking about?
I read everything this morning from Ro Khanna and Chamath and Freeberg that were going back and forth, and I saw your comment. Yeah, these people, they don't get it. They don't get it at all.
Yeah, I think there's a lot. I mean, you put a lot of stuff in there. I mean, with respect to the Chinese coal aspect of things and other countries, I think that's part of the beauty of allowing the U.S. to be an energy exporter, be helpful. Our CO2 emissions have been on the decline since the transition from coal to oil to natural gas in the United States, and so that's been very beneficial. If we're able to help other countries do the same, it'll be a global environmental assistant than what trajectory they have been on. And yes, eventually that I would like to see more solar in the long term, but there's just some areas in the world where solar just isn't good work. Like if you're only getting 5 or 6 hours of daylight in the northern parts of whatever hemisphere you're in, like why put up solar, right? Maybe wind is a better opportunity, but I still see so many people reliant upon solar when in the winter time they barely have any sun, but yet here they are trying to push for solar. So it's a little bit of interesting things that I've seen there, but yeah, the housing piece, it's tough, man. Like you're coming off of a back end of zero interest rate policies, so it's tough to kind of motivate people. You know, rates had never been that low ever for housing, and so to get people to digest where they've been is interesting. So I'm curious to see how people get back to it because really the right now is kind of like the norm, I would say, for what people should be expecting. Um, kind of in the what we saw in the early 2000s before the financial crisis and zero interest rate policies was like 5.5 to 6% on the 30 year. And so uh, it's interesting that people are still complaining to an extent, but it's what happens when you have the cheapness going on that we experienced for almost 15 years. So, but yeah, I am kind of curious. You're talking a little bit about companies getting back after it, people getting back after it in terms of buying up real estate. I mean, that's obviously a thought that you have with QXO. Is there other stocks as a second or third derivative of this housing thought that you have going into 2026 that you're looking at potentially dipping your toes in, or is it mostly just going to be focused around QXO?
So before I answer that, thank you everybody for being here. June, thank you for being here. Ian, Ray, Michelle, really appreciate everybody being here, hanging out with us on a Saturday. Hopefully, you're drinking some coffee and relaxing, staying out of the cold weather. My play for housing is QXO for capital appreciation, but I've been putting a little bit more money into AGNC and Starwood Property Trust. Starwood's not really a housing play, although they do own multifamily homes and et cetera, et cetera. AGNC, I think, is very interesting because their cost of funding will come down. I think they'll be able to increase their rent roll spread. And even though it is not the greatest chart, the 14% dividend yield and it's a monthly dividend, I think will do significantly well in a lower rate environment. So those are pretty much how I'm playing the housing market. Those two dividend plays and then QXO because I think that Brad Jacobs is going to do something big in the industry. Man, Friedberg is going off today.
Who?
David Friedberg is going off today.
So, Steve, no thoughts around potentially moving to Minnesota?
Yeah, that'll be a hard no, sir.
Not looking at opening up any daycares?
No. Now, if you had asked me what are the chances of moving to Montana, I'd say, after watching Yellowstone, I could see myself in a cowboy hat and riding a horse with a big belt buckle. But Minnesota is going to be a hard no, sir.
What can I do to help you? I mean, 1 or 2 years.
I mean, you have to pay me a lot of money to move to Minnesota.
I mean, the government's paying people millions of dollars.
Yeah, no, it's just not,
Okay. Well, so they pay you a lot of money, and we're talking about millions of dollars here for not actually watching children.
Yeah, but am I actually going to get that money?
Not anymore. I think the gig is up.
I think the gig's up. I think the gig's up. It's a little cold out there. I just don't think it's for me.
Actually, so it took me a minute it took me about 12 hours or more to digest this one. I
Ooh,
made a
before
tweet.
you give us our synopsis, am I going to be able to hang out with Jesse Ventura if I go to Minnesota, or is he 100% in Mexico now?
I have no idea.
Okay.
I wrote a tweet yesterday. So Tiffany Fung said something on X or something like that. So I quoted it and I said, I forget what I basically said, but basically I said, I'm going to be going to Minnesota to open up a daycare, BRB, be right back. And Sam underneath, I didn't think about this until I was brushing my teeth this morning. He posted as a reply in quotations, be right back. And I was just like, why did he just say spelling out BRB? Like, why? But then I realized he wanted me to name the daycare Be Right Back because I would just be out to lunch all the time because I don't actually have any fucking kids to watch. So it took me like 12 hours to understand he was trying to say Be Right Back Daycare because I actually probably wouldn't actually be there if I took advantage of this loophole. But anyway, yeah, I didn't think about it until I was brushing my teeth this morning. I was like, that smart son of a bitch. So we don't give Sam enough credit. Smart guy.
Yeah, definitely. Definitely. Well, Minnesota's out of the question. Do we dare talk about California for a few minutes or not?
Yeah, let's do it. I don't know everything and know the research. I mean, I know it's a void pit for taxpayer dollars and things not actually going anywhere, but I'm curious to hear what your actual thoughts are.
So I'm going to give you just the raw thoughts, and I want to show you some of these posts. So
yeah.
Overall, I am against additional taxes. Here's why. I don't care how much money you have. I don't care if you make 50 grand, 100 grand, 500 grand, a million, 5 million. I don't care. The reality is you are taxed on that money. And then everything that you buy after the fact, you are taxed on that again. Mm-hmm. We are overly taxed, in my opinion. Now, this idea of a 1% tax on billionaires for 5 years, I think is a bad idea. The reason I think it's a bad idea is because you're talking about the class of people that have the means to leave at the drop of a helmet and can just bounce. We saw how many companies have left California so far. And I have no horse in the game because I don't live there. But Oracle has left. Tesla has left. And when I say leave, they move their corporate offices to get out of the California tax structure. Obviously, they may still have operations there. Palantir left. And then Hewlett-Packard left. Those are the big four. I mean, those are 4 huge companies. 4 of the largest companies in the country have left California. That does not include smaller ones. We have seen several billionaires leave and go to Texas and Florida. We have also seen from New York hedge funds leave. And the reason this scares me so much is because I'm worried that this can get adopted on a larger scale. When you put people in a position where they have the means to leave and they feel that they're being treated unfairly, if they do leave, it is not just a hit on taxing their revenue, their income on a state level. You are losing all the sales tax on everything they buy in that state. You are also creating an environment where they are not visiting restaurants and all these other places. So it hurts the bottom line of businesses that provide jobs. And I think it's a backwards way of thinking rather than just solving the problem altogether. And they have already seen, just look at the all-in guys. J. Cal left, went back to Texas. You had Rogan leave, go to Texas. You've had a lot of people leave, and now Freeberg and Chamath and Sachs are all considering leaving. And you look at this thread that's going on today. I mean, if we read through it, it is really scary. And where I think it is really crazy is that if they get this passed, what's to stop them from going down a level and saying, okay, anybody who has 100 million, we're going to do a 1% wealth tax for 5 years. And then anybody who has 10 million, and then anybody who has a million. Because the idea of taxes started with the most wealthy Americans, and then it became a nationalized scale. So this could very easily spiral out of control over the next several decades and impact everybody. And if you have it where this is only in what is already the highest cost states to live, and more people move to other states such as Texas, Tennessee, Florida, you're going to hurt the job market in those states that they're leaving. It's just a bad model, and I hope it does not go through. So what are your thoughts on what I said? And then we can actually read some of these comments from Rokana and then Freeberg and then Palmer Lucky, it's very interesting.
I haven't seen what Palmer said. That'd be interesting to see. But I mean, it's everybody, right? A lot of people are hitting on so many great points in the chat. So, I mean, agreeing 100%. We've seen this happen in the 90s and early 2000s with the UK. We're seeing it happen to the UK right now. I agree wholly with what you're saying with people leaving the California in droves, not necessarily just for, and I'm not talking about this versus a left or right issue. I'm just talking about the facts here, guys. Like, I'm not trying to be political about this. It's like you're increasing taxes, the mansion tax, which is causing housing prices to decrease to below $5 million, and or you have to pay an additional 5%. So that's artificially lowering the amount of money people are willing to spend on a home in California. So that's driving away people. You have the increased regulatory environment where it's super difficult. Graham Stephan just did a phenomenal video about the regulatory environment and how he was trying to hold some of his rental portfolio within California, and the amount of regulatory restraint he was met with, and additional capital that he had to be able to make a dollar in terms of rent roll from some of this housing that he was trying to provide in an area that needs housing, right? You would think that they would try to cut regulatory tape to be able to, and not in a bad way. Like, obviously we need regulations to keep people safe, but in terms of where we need to be in terms of streamlining some of these things and making sure these things get expedited to allow for further housing, because there's a housing crisis within California for affordable housing. Like, cut some of these long dated and additional capital so that people can actually afford to keep rents lower. But instead, you're in this downward spiral in California with increasing taxes, which then means that people need to increase rents to be able to keep up with it. Then you have these increased regulatory environments, then you have these billionaire taxes and just 12.5 to 15% state income taxes. Like, it's just for things to not actually get done. Some of the worst homeless problems in the United States. So I just don't understand what's going on. We've seen this time and time again. When taxes get increased in New York, in the United Kingdom, people leave in droves to be in not interest free, but better regulatory or just tax environments where they can put their dollars to work and not necessarily go to a government that gives it to open up childless daycares. Like, it's interesting how I just don't comprehend how people can continue to live this way, but at the same time, where was I kind of going with that? It's very interesting. I don't get it. I scratch my head, but I'm curious to see that if eventually the pendulum swings in California. My hope is that it does, and people start to realize that this excessive tax environment and regulatory environment leads to a loss in overall, and I think an overall acceleration of the economy in California. And I think the benefits that they've seen where they think that they can do all this excessive taxing is because you have such great companies within California and Silicon Valley that allow it to be the largest GDP state in the United States, that they're able to continue to bite the hand that feeds, but the hand keeps getting bigger regardless. And I think eventually, when you have enough companies leave, maybe it's Google, Maybe it's, these companies also have headquarters in Texas and many other um, pro business environments that eventually you're going to bite the hand that feeds enough where they're going to say, you know what, it is important for us to focus on ourselves and eventually leave the state of California. And then I think only then people will realize it's gone too far. And really when the economy starts contracting is when people realize, okay, to to go into a more business pro environment. And that's exactly what happened in London, a decade back. That's what happened in New York, and hopefully people recognize. And unfortunately now it seems like London and New York are kind of on the opposite trajectory. It got too easy, and now things are going back to a more regulatory and tax heavy environment. But it always comes in cycles. So hopefully, this is the peak. I would hope, fingers crossed, of the California cycle, but it's only gotten worse over time. So we'll see where it goes from here.
Yeah. So,
sorry, long-winded answer.
No,
but
it's fine. This is not a political discussion. I could give a shit about politics. I'm about what are the best ideas, or what do I think are the best ideas, and that's how I tend to lean. And the reality is that we are looking to tax the demographic of people that are already taxed at the highest level, but also create the most jobs and spend the most to help keep places open. And having that wealth concentrated in other areas is not good for California. And if you look at what's being said from Chamath and Freeburg, I mean, this is getting pretty interesting now. So let's zoom in on this. So, all right, I'll read
people are
this.
saying
It's
I have
not-
no idea about California. You're right. I don't live there. I don't have that particular like in-depth
It's not
knowledge.
about,
but,
yeah, but hold on.
but I
It's
work
not
in
about
I
living
work in
there.
an industry that is being completely shut down by that entire state.
It's
And
about
so I do know a little bit about regulatory environments in that area.
it's not about just if you live there or don't live there, okay? It's about if this actually passes, what are the ramifications on a national scale? And then where do they go from there? So what Chamath says is it's not 1% a year for 5 years. It's a one-time 5% tax on all assets, and it will kill entrepreneurship in California. Here's an example. John Doe starts a company. He takes a normal salary, nominal salary, say 150K for this example, and the rest in equity in the company. Let's say he owns 20%. He raises venture capital in 26 from someone that invests 100 million into the company and values the company at 6 billion. This means his 20% is worth 1.2 billion. I put it in quotes because he can't actually sell. He has a paper value that punitively says he's a billionaire, but he actually lives on 150K because that is what his income is. Just because someone decides to make a bet on the business does not mean that some bank account in your name magically gets created with 1.2 billion in it. Under the proposed tax, however, John Doe would now owe 60 million in cash to California in 2027. How will he pay it? And there's more and more. And him and Ro Khanna started going back and forth on it. What got more interesting is Freeburg has been coming out of his shell, and he went at it actually harder, I think. So Ro Khanna started with Peter Thiel is leaving California if we pass a 1% tax on billionaires for 5 years to pay for health care for the working class facing steep Medicaid cuts. I echo what FDR said with sarcasm of economic royalists when they threatened to leave. I will miss them very much. Somebody reported that Larry Page and Peter Thiel are making moves to leave California. So then Freeburg and him get into it. And I'm not going to read everything Freeburg said. I'll link this. It's a lot. But what I said about Palmer Luckey, somebody posted about Ro Khanna with a CNBC video saying that at one time he opposed taxing unrealized gains. So he said, I do oppose capital gains on unrealized income and workarounds for founders with illiquid assets and unprofitable companies. A 1% wealth tax on established billionaires is reasonable. So Palmer Luckey comes out and says, but you don't actually oppose capital gains on unrealized income. You support this initiative. It is completely disingenuous to claim one position while campaigning for the opposite. You are fighting to force founders like me to sell huge chunks of our companies to pay for fraud, waste, and political favors for the organizations punishing this ballot initiative. I made my money from my first company, paid hundreds of millions of dollars in taxes on it, used the remainder to start a second company that employs 6,000 people. And now me and my co-founders have to somehow come up with billions of dollars in cash. And if we can't, the state is going to seize my home, garnish my wages for the rest of my life. One market correction, nationalization event, or prohibition of divestiture, and I am screwed for life. But hey, at least you oppose that in some purely abstract and hypothetical way that doesn't influence what you're actually doing. And this is where it gets really scary, because a lot of Americans have a vast amount of their net worth tied to their home. And this isn't about making sure that the billionaires pay their fair share. I'm all for that. Okay. Even though they are the ones that are creating a lot of jobs and putting into the economy, I do believe that they should pay their fair share. The problem with this is if this gets passed and then they start expanding it. What if you have a home that you put 100,000 down on, and you start paying it down. The house becomes an $800,000 house, and you still have 400,000 left on the mortgage. You don't own the house outright, and then the house becomes an unrealized capital gain because the value of the house went from 550 to 800, and now you owe money on the $250,000 spread of profit because that's an unrealized capital gain. I mean, that's why I am so angry at this, because this can spiral out of control very quickly. And then if you talk about stocks, how many people in the community, this community, are up on Rocket Lab, or up on Palantir, or up on SoFi, up on Robinhood, et cetera, et cetera. But if you didn't sell, you didn't recognize a profit. Well, let's say you're sitting on 100 grand of profit, or $1 million of profit, or 10 million of profit. Now you have to come up with money to pay for an unrealized gain that may not be there in a year from now. It's crazy. Like, this is not good policy.
Mm-hmm. No, I'm with you wholly. I go back to thinking about, what if Elon was taxed to oblivion during his PayPal venture, right? He
Right.
never would have been able to bail out Tesla. He never would have been able to bail out SpaceX, because SpaceX almost went under just like Tesla almost went under. And I don't think people fully recognize, yeah, he's worth $750 billion, but the things that he was able to achieve, like revolutionizing and modernizing the auto industry, making them greener vehicles. And yeah, of course, you could say, oh, well, it's not completely green because our grid is still based off natural gas and blah, yada, yada, yada. But he's at least building the foundation to get us towards greener pastures, and making road vehicles more efficient, and probably accelerating 20 years worth of auto industry compared to what Ford and GM had done, and really kicking them in the nuts to say, hey, you guys need to figure this shit out, otherwise you're going to be left behind. Then he's done the same with SpaceX, the most frequently launched rocket in the world, surpassing other nations that are trying just as hard as he is, if not harder, and have way more capital than he did. But yet he was able to get it done, and has revolutionized and created an opportunity for companies like Rocket Lab to exist. And he's also expanding heavily into robotics. So to ask anybody out there, the state of California, and even the whole entirety of the United States, is taxing trillions of dollars from the U.S. economy, but yet here we have one person, one individual, with far less capital, being able to innovate and do so much. And same thing with Bezos, right? If you look at these people, so if you tax them to oblivion and do so much, these people will go to where the best bang for their buck is. And if that's the case, who's to say that they're not going to take their efforts to Southeast Asia or to somewhere else that's more favorable to do business and create these opportunities than in the United States? And then the United States misses out on all that follow-on revenue. So to me, I would much rather have taxes done at the business level than at the individual level. And and not, maybe not even at all, but like I would much rather these things be done on revenue or on based off of income on corporate businesses than the investors, because a lot of these guys invested hard-earned capital to be able to reap these benefits entirely. So it's strange to me. I mean, one, there's just a whole widespread of a lot of this money going into inefficient tax spending in general, as we talked about earlier in the stream. But two, these are the people that actually drive the economy. So it's very much a head scratcher to me.
Yeah, and there's a whole additional side to this that gets very scary, because if this was put into place decades ago, would we have a Meta Platforms? Would we have an Amazon? Or would they be a speckle of what they are today? Because what if Zuckerberg had to sell off control every year because of unrealized gains? And then who's
He
to
could have been
determine?
removed as CEO, and then
100%.
Yep.
And then who is going to determine what these businesses are worth? Is it off of the last valuation round? Is it a multiple on revenue? So then who decides? And then you start getting into other things. And now, if you get a sliding scale down to lower levels, we could be talking about somebody who owns an electrician company that does 5 million in revenue a year, that employs 30 people, that, because they hit $5 million of revenue, that is now going to be a taxation on unrealized gains. Well, somebody who owns an electrician company that's doing 5 million in revenue, if you put a 10 times multiple or a 5 times multiple, or even a 2 times multiple, at 2 times, you're going to value the company at 10 million. The chances of them having the ability to pay off a tax on that is probably not reality. And this becomes a very slippery slope very quickly. And we need to look at creating a stable economy for job growth, not stifling innovators and entrepreneurs for building companies. And the taxation level should be at the business level, like Matt said, not at the personal level, because a lot of these assets are illiquid assets. And just because somebody has $100 million stake in a private company does not mean that they have $100 million of cash. It is two different things.
Yeah, I mean, overall, it just limits the future potential of so many things. It just stipends growth within the United States and or whomever is doing it. So, yeah, I hope it doesn't happen.
Yeah, I hope it doesn't go through, because I can very easily see a era where this becomes a nationalized thing and it starts going to lower levels of income, which would just not be good for anybody. And it is already crazy that we are taxed on our money, and then every time we buy something, we are taxed again. It's just, it will hurt the stock market too. Like, for everybody thinking that it wouldn't hurt the stock market, good luck with Amazon growing into Amazon. If we want the next 20, 30 years of prosperity for our kids and grandkids, we have to make sure that we have a business environment that is economically stable for businesses to actually thrive. If we want to make sure that good, well-paying jobs are spread across the countries, we have to make sure that these businesses do not consolidate in 2 or 3 states.
Mm-hmm. Yeah, I mean, think about this. I mean, if, say, Elon were to still live in California, that would mean, prime example, this is a theoretical situation, but could have plausibly been the case. If Elon says, you know what, I'm going to stay. I love California. California's my home. I'll stick to it. And then he owes us 1%. Well, 1% on Elon's net worth is $7.5 billion. So what is that going to do? That's going to artificially put a massive headwind on what he's able to sell. Well, SpaceX is pretty illiquid. So let's just say all that selling goes into Tesla, right? That means that there's always going to be $7.5 billion worth of Tesla that's always being sold and artificially lowering the share price of Tesla because he's selling, and then all the other potential billionaires that have been made from investing in Tesla also having to sell Tesla. Eventually, it's going to have a pretty big drag on the stock price. So yeah, I think it's a little bit of holier than thou bullshit that some of these taxes are being popped up.
Yeah, we'll see what happens. I don't think it's going to matter right now. If it passes, it's going to be very scary. I mean, this is not stopping me from investing in the greatest companies in the country, but I also want to make sure that we continue to have the greatest companies in the world, and this is continuing to be a country of innovation. We don't want entrepreneurs to get stifled and decide to leave. That would be horrible. And it's not going to stop at these levels if it gets passed. We've seen it with income taxes. We've seen it.
That's what Hot Chris Patel is saying in the chat.
Yeah, I mean, it's scary. And you don't want to disincentivize all these people from stop working. I mean, think about it. What if Zuckerberg says, all right, I'm done? What if all these guys say, all right, I'm done? What happens then?
Yeah.
Right. Hopefully we don't have to worry about it. Hopefully cooler heads prevail. I still think I'm still bullish about next year. I still think we hit 8,000 next year. I think Matt thinks I'm a little crazy with that, but it's only 14% from where we are.
I don't think it's crazy per se. I mean, when you say, let me just clarify, because I always have to clarify with Hot Steve. When you say 8,000, you mean touch 8,000 or sustain 8,000?
No, I say we get to 8,000 next year.
So we touch it, not necessarily hold on to it.
I mean, I would like to see us hold on to it. I mean, have you seen the projections yet?
They have a year-end target though.
They're saying year-end target. Yeah.
These are them saying that it's going to sustain those numbers, not touch it. You're saying it touches.
Yeah, I think we end the year around 8,000, but I think we hit it at one point next year. And I mean, for the median to be 7,700, I think that's pretty good.
Yeah, it's 10%, 11% from where we are today.
Yep.
This is pretty crazy. But nobody thinks we're going to end lower, which is interesting. Everyone's optimistic about 2026.
Yeah, at worst, a flat year.
And I'm consciously confident that we will have a 10 to 20% pullback at some point next year. So I don't know. It's tough. I mean, do I really think at some point I think we'll have a 10 to 20%? Will we have an immediate reversal? I guess it depends on what's causing that 10 to 20%.
Maybe we see a retracement, but ultimately I think that the combination of economic growth, which is probably going to be hotter than what the Fed is projecting, lower inflation, lower rates, and if unemployment starts to reverse, I think we get in a situation where we get an everything rally, especially when we get the benefits of AI and robotics from the biggest companies in the world, not big tech, but companies like Johnson & Johnson, Coca-Cola, et cetera, et cetera. So I think it's going to be really good next year. I'm excited. I mean, I'm excited about continuing to invest. I'm excited about being in a situation where there's value to be unlocked with a lot of companies. And I still think the bigger companies are just going to get bigger when we look at the RPO, we look at the revenue growth, and I'm not seeing a doom and gloom scenario. This Fed economic report cleared the deck for a lot of things, and in a lower rate environment, smaller and mid-sized companies are going to have an easier time borrowing capital to reinvest. I think you're going to see unemployment decline, and I think we're going to see big earnings expansion.
Mm-hmm. No, I believe that things will continue to do well from an earnings perspective. I mean, people hearing me say 10, 20%, I don't mean that the 10 to 20% is normal for a small pullback. I don't think that necessarily means that we get derailed. I don't think we're going to zero. I think that you're always going to have a blip of 10 to 20% in any given year. Some years you're lucky to only have a 5 or 10% pump down. But to me, I think that, just like we did in April this year, just like we did in November, you're going to see a decent pullback in some select areas. But I think maybe even more, 30, 40, 50% in some areas. But I think the broader market, kind of like what we saw in April, needs a small retracement just to test how things really are.
Oh,
test the robustness of the ongoing economy. So I don't mean that we're gonna be in some sort of multi-year depression or anything like that, but I think there will be something that comes out next year, just like DeepSeek, just like tariffs, just like this or that, the other, that cause some sort of spook in the market. So yeah, I don't do that to try to like scare people. It's something that's quite normal, and if that freaks you out, then maybe investing in equities isn't your thing.
Yeah, and I'm not saying it's going to go up in a straight line. I'm fully expecting a 5 to 10% drawdown. I'm just not seeing a bear market for next year. And if we do get one, it'll be short-lived. You look at every bear market that we've had so far, it is probably going to get wiped out quickly. And let's bring this guy on, Chris Patel.
What else is new?
I mean, I need to start a damn Kalshi market unless he's not talking to us.
Guys, it's a freshman football over here. It's not even JV. Oh my God.
I mean, I want to see a picture of his setup. Like, does he have a damn switchboard or something?
I don't know. He's enjoying this damn Mandarin, though. It looks pretty good.
There we go.
Listen, it's not my fault. My wife takes care of me and gets me like peels orange. What is this on the tangerine? A clementine.
What does that have to do with anything?
Nothing. Look at him. Look at him. Bunch of boring ass dudes, bro. I got a producer wife. You need to get you one of those. All right.
No, they're talking about your setup. That
what
down there? That doesn't ever work when you connect.
Oh no, I just didn't detect it right away. Because the thing is, I was literally laying in bed. I was like, all right, I wasn't gonna join, but then I was like, these guys aren't talking about the most important thing this weekend, which is silver.
The reason is because I've covered it. But go ahead.
No, wait. So what do you think? What's causing it? I want to hear this before I start spewing my bullshit.
No, go ahead.
No, you tell me your bullshit before I tell you my bullshit.
So it's a lot to go through. Okay. Mm-hmm. The silver trade is so much. Have you been watching any of the silver videos, by the way?
Not really. Here and there.
Send you some.
Okay.
So, like silver stackers, or just
in general? Yeah, it's pretty freaking crazy. So, look, if we're going to get into silver, it's important to establish that it's really two assets in one. It's a monetary metal. Becomes a macro hedge, currency protection, geopolitical bid, but it's also an industrial metal where it is used in everything from manufacturing and power systems, and it's becoming increasingly important for items such as chips, data centers, solar, et cetera, et cetera. And precious metals have been extremely sensitive to the path of policy rates, and when we start seeing what is happening now, the very short version of this is you have had so many people and geopolitical situations hoarding silver. There's a shortage of silver now. China comes out, puts exports on, they're going to hit Monday morning, supposedly. I don't know if that's actually true or not, but they're talking about big export controls on it that on Friday night sent the spot price in China to 81.50, which is $6 above where our spot price was. And now silver's trading around 80. This has been a silver stacker's freaking dream. And I got to tell you, silver could go to 150 in the next month. I don't think it's going to, but the shortage of silver is becoming a little scary.
Okay, so that's your thesis. It's just
no, that's just a very high level. I'm sick of talking about silver, to be honest with you.
Okay, so I'll kind of like go through the motions of it, and I'll start where the problems are, what's causing the current issue, and what the end goal and end solution is. So China is, like you said, Steve, one of the largest importers of silver into the country. Why? One of the most basic use cases from an industrial side is actually solar, which a lot of people are actually kind of not talking about. So if you look at the technology of solar, it's kind of changing from this thing called P-type to N-type. And what's happening is that if you look at the technology for solar, it requires more silver content. This new version that's a lot like the solar panels, they're a lot more efficient, but they require a lot more silver to basically make them work correctly, right? So in the manufacturing process just requires more silver. And like I have the actual information right here. Let me just share my screen. There. Here you go. So right here, this silver paste content is actually mining expansions, blah, 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 blah. The moderate changes short elevated the silver price. But basically, this technology right here called TopCon, 85% of the world's solar manufacturing comes from China. And I think that's one of the keys to keep an eye on, because they control so much of the solar industry, they require a lot more silver in order to make that industry work. Now, one of the things that they wanted to do is ensure that they had supplies. So they're putting restrictions on exports, right? So they're saying, hey, listen, if you try to take silver out of China, right, you're going to need like an export license. The reason why is because there's been this trade that's happening called the Shanghai arbitrage, where if the price in China is, let's say, $70, and in London, where the other metals exchanges is like, let's say, $69. A lot of times what people have been doing is basically taking the physical silver from the UK and sending it over to China, and then they collect the spread on it, and basically they're just converting dollars at that point. So you're borrowing money, US dollars, you're buying silver in London, and then you're selling it in Shanghai, and you're making money on the spread, right? And then what happens is you sell in Shanghai and you get that dollar, and then you take it back and you pay down whatever debt you took on in order to finance this whole thing. So one of the things that's happening is this gap is opening up significantly between London and Shanghai. So right now, if you go to London, the prices there are like 76. The prices in China are like 81. So the spread is actually widened significantly. One of the reasons why it's widened so significantly is because you've got a really big supply and demand imbalance. Now, the Chinese government comes out and says, hey, listen, we're going to put restrictions on exports in order to make sure that we have adequate supply. The problem is when they did that, they artificially expanded that giant gap. And instead of it getting filled, people are worried, saying, wait a second, we may not be able to get our money out of China if we end up doing this trade. So it's becoming this weird situation where the Chinese have they wanted to try to control supply, but what they didn't do was control the price. And now what's happening is everyone is saying, wait, you can't export silver? That means that there's a shortage of silver. Oh my God, let's all start stocking up on silver no matter what. Otherwise, we'll be stuck out of it. So the mindset of people is, oh my God, we're in this scarcity zone, right? It's pretty much like if you, and Matt knows this too, because he's in oil and natural gas. If there's any hint that the price of something is going to be higher in the future, what people start to do is buy a shit ton of it today. And it's gotten so imbalanced right now that forward contracts are cheaper than spot prices in silver, which means that if you can get delivery today, it's cheaper to buy it today than to actually get it a year from now. And that should not be the case. That's very backward in the way that something is supposed to be, at least on the commodity cycle. So that is something that I guess the Chinese government did not anticipate. And then there's all these Chinese retail investors. They saw the price of gold starting to go up, and they've been going absolutely bonkers buying this stuff up. Now, one of the things about silver is that, of course, you can't really move it around nearly as free flowing as gold. You know, even though gold is hard to move, silver is even more hard to move. Imagine taking an entire ingot of silver and trying to move around with it. And you know, it's just a very difficult thing. So a lot of people, what they did is instead they've been buying what is it called? Silver in China. And there's only like one ETF over there that does this. Let me actually show you guys. And it's crazy what happened this weekend. I don't know if you guys saw this, but one second. This damn it. China ETF silver restrict. So right here, this thing happened this weekend where this Chinese silver fund, everyone was buying it like crazy. And you know what the real problem with this is? The total amount net asset value of this ETF, it got oversubscribed and overbid by 60%. The ETF was like, wait a second, you guys are buying something that we don't even own, and you're paying. Well, we do own it, but you're paying a 60% premium on this thing. It got so bad that the fund manager stopped accepting new buys, and the regulator kind of came down and said, "Wait a second, no, we're gonna not allow any more money to come into this, because otherwise retail shareholders are going to get hurt by this." So the UBS SDIC repeated multiple earlier warnings that the fund's high premium over the value of its underlying assets, silver contracts on Shanghai futures can pose a danger of steep losses should silver futures reverse. So it's crazy to see this happening. So a lot of what happened was the initial pump was, hey, the government is saying that they want to limit exports. Oh my God, there's probably a scarcity of silver. Let's all try to buy in. And then they started buying in, and then retail shareholders started to go ape shit on this stuff. They started to buy. And then all these people, if you're a solar manufacturer, you're trying to manufacture for the next 2 years. You need to do what? You need to lock in supply now. Otherwise, you're going to go out of business. Do you guys know that a lot of solar panel manufacturers in China have gone out of business this year? And more, if the price of silver stays at the current levels, they're all going to get crushed. You know why they're all going to get crushed? Anyone? You want to guess?
I don't know anything about
why are they going to get crushed, Chris?
Because if you have to buy in Shanghai for $80, while your competitors in India can buy it at $70, right? Silver, wouldn't that crush you as a business? Because what happens?
Yeah, creates margins that compress.
Margins, dude. The Indians have a huge margin over you. All they have to do is buy silver from London.
If you're buying at 80 when your competitor is buying at 70, your margins are compressed because you are spending more to create the same product.
Right. And you guys know solar margins aren't exactly very high. You're talking about like mid-single digits at the best. So you're basically destroying your solar industry. Now, the Chinese, They know they have 80 to 85% market share in solar. Okay. Do you think that they're going to let this policy go on any longer than it has to with the current situation?
This is not just about the Chinese, though. This has been an ongoing thing throughout the year. At the beginning of the year, the Silver Institute was indicating that we were at multi-year deficits that were going to be ongoing. And this has been a structural setup that many silverheads, as I call them, have been screaming about for years, from the imbalance ratio of gold to silver to the multi-year deficits and a structurally tight physical market. And now, with all the demand, like you're saying, from not just solar, but also EVs and data centers, has helped it. But the big thing is that the U.S. finalized the 2025 list of critical metals, which explicitly included silver.
Yeah, I mean that's what triggered the Chinese, though, Steve.
Yeah,
that's what
I know. But I'm just saying that there's a whole runway that led into what happened with the Chinese. The Chinese is the icing on the cake.
Mm-hmm. Now,
and it's a bad situation, is what it is.
So a lot of people right now, they're focusing on SLV and the inverse of SLV. What I found was there's a Mexican company that's on the wrong side of this. I don't know how to short this company. Otherwise, I'd be shorting it like there's no tomorrow. This Mexican company is one of the largest producers of silver. At least their subsidiary is one of the largest producers of silver in the world. These guys, they hedged their position 2 years out at like $30 cost collars. Insane, right? So what's happened is their stock has gone up significantly, which is good to see for shareholders. The problem is they've got so much hedging right now at the lower price that they're sitting on crazy unrealized losses, with the share price being crazy overvalued now. This company, let me see if I can bring it up real quick.
Matt, are we getting into the silver market?
No, I'm too poor.
Damn it!
I
don't have that
prediction. I have a prediction that if silver hits 100, you're going to see a drastic sell-off within a month, because so many silverheads have been stacking silver at $15 to $20 an ounce that a 4x return, 5x return, I think you'll get to see a lot of silver come back on the market.
Yeah, I've thought about opening just for fun.
Okay, I found it finally. Here we go.
Chris, you're gonna have to reshare your screen because it didn't update on yours.
Okay, give me a second.
Yep.
So take a look. So this is the company right here. Believe it or not, they report in US dollars, even though they're a Mexican company. Let's see. They have an OTC listing. Let me just. Okay, there it is. IPOAF. Okay, so this company right here, if you look at their performance, it's gone from $12, $11 where it's traded for the longest time, and now it's climbed all the way to $54, right? And this is in just 2025. Now, if these guys were, like selling on the spot prices, maybe some of this could be justified. But dude, this is not justified. They've sold so much of their exposure on a forward basis that now they're sitting on unrealized losses. But the stock keeps going higher and higher. So it's such a weird situation that this is in right now. And if you look at like one of the largest producers, it's this company is listed like Fresnillo. They're listed in London, but but basically they're Mexican precious metals company. But these guys are like part of the same group, but they're not nearly as hedged as these other guys are. Most of the silver producers are not hedged. Some are a little bit hedged. Like this company is something that I'm looking at, like to see if how much of their production is hedged, and it doesn't seem like they have a lot of hedges, but I have to, like I said, do more research on it, because I did find that they had a facility over in Canada that they had to hedge, because if you guys know anything about, like, well, I mean, you guys know, whenever you go for any company that's I mean, when you go for any like new projects, they always have a ton of upfront capital expenses. So a lot of times what happens is they have to basically front run that production to make sure that they're able to actually finance the construction. And so they might have actually done that for this one facility, but the other ones they haven't really had to do much for. But it's like all the silver miners are running right now. The problem is this is a cyclical business. It's unsustainable. Like, you cannot stay this high. And right now, I feel like the Chinese at some point are going to reverse this, and they're going to end up dumping metal into the market. Like, the Chinese government is going to start dumping silver into the market and crashing Shanghai prices. And then when they start like dumping into the market and cause like the price to come down, then you're going to have a whole bunch of people panic selling their silver. And when that happens, then you've got this cascade of liquidity coming out of the woodwork. The question is, where's the top in this? You know? So, yeah. The thesis is, I don't think that this whole silver trade lasts longer than probably, I don't know. That's the one hard part. I don't know how long it lasts. But the point is, it's unsustainable for Chinese solar industry with the current spread the way it is. And that's the thesis that we need to keep in mind. So if any point in the next 60, 90, 100 days, 180 days, we hear that the Chinese are reversing action, or they're causing some kind of liquidity event, this entire trade falls apart very quickly. And all of these miners, they're going to get crushed. And they all have and the miners actually have options on them. So I'm, like I said, I'm getting my greed radar is like getting like interested now. And if you look at just on a technical level, just pull this up 1 second. SLV, right? Look at this thing. The RSI on this thing, on let's say a max basis, it's hitting all sorts of technical highs. 90 RSI on this thing right now on silver. Okay. This goes back all the way to like 2007. So yeah, I'd love to hear your thoughts on this, if you guys have thoughts on it.
Matt?
Steven?
You have any thoughts?
Are you shorting it to oblivion or what?
No, I mean, my only thought with this is the fact that freaking Silver Eagles are going for freaking 89.58 is insanity. This isn't going to last. So I think that this is going to reverse hard. Everybody who's been stacking this is the moment they've been waiting for. Physical silver is very hard to get out of. People are sitting on, I don't think people really realize how much silver people are sitting on.
Yeah.
They were buying these at 15 and 20 bucks.
Well, not only that, but I think a lot of people back in 2012. So you have a bunch of people that were
3 and 4
buying this, thinking that this was going to be, 100, going to 100, and it stopped at 40 in reverse course, like you stated, for the last 12 to 13 years, and this is their opportunity to potentially get out.
I mean, there's a lot of people that used to go to the bank and buy rolls of quarters and rolls of dimes, sift through them, take the ones that were silver out and create their junk silver, and then bring them back to the bank. Like there's so much silver that people are hoarding that this is not looking to last. And this can squeeze to 125 or 150, but I'd be willing to bet within a month and a half, silver's under 50 an ounce.
Yeah. Just saying, guys, watch the Chinese solar market, because the Chinese solar market, like you guys said, is the biggest consumer of industrial silver. And if they start to buckle under the pressure, the government's going to have to step in. And if the government steps in, they're going to do what they did in 2021, which is flood the market with supply. Because the Chinese do have supply. Let me just show you 1 second. And what they did in 2021. Hold on. China floods. Let me see right here. So when this happened, like in China, like where commodity prices surged, the Chinese, like they ended up stabilizing this themselves via reserves. Let me see if I can find it. Hold on 1 second, guys. All right, you can talk about something else while I find the information. 1 second.
Yeah, I think for people to understand the other factors, research the huge fine that JP Morgan had to pay. They had to pay hundreds of millions of dollars in fines for spoofing the silver market. This is, once again, an ongoing thing. A lot of things leading up to it. So what are we doing for 2026, guys? That's, I think, what everybody's interested in is what investments are we going to be making?
Everyone wants to know what hot Chris is buying.
I'd say look at Amazon, but you know, you got to be strategic with it. Like I would say if we get sort of a market dip like Liberation Day, that could open a point where Amazon is probably the best best value to get into. I mean, they've got so many catalysts for 26, 27. I mean, they've got some giant they have some giant what is it called? Expenses as well. But yeah, Amazon is probably the best to look at. I mean, they've got, like I said, they've got their main catalyst is number one. They've got Tranium chips. They've got so they're definitely trying to cut Nvidia out to some degree. Then they've got Project. I don't even know how to freaking say it. Kuiper. That's finally like coming online like next year, right?
It's not Kuiper anymore, Chris. It's Leo. Get it right.
Leo.
Yep.
It's Project Leo.
Yeah.
Okay, whatever. I like Leo better than Kuiper. I don't know. Kuiper sounded like it was hard for me to even say it, but
I think at least officially. I think it's officially been rebranded. I'll double check.
Has it? Okay. Well, they've got that coming online. Then you've got what is that called? Like all the stuff around AWS. And if you look at just purely Amazon on an EV to EBITDA basis, on a forward basis, their EBITDA is projected to grow pretty significantly. So among the Mag 7, they're likely to probably outperform. So they are where Google was a year ago, where everyone kind of just wrote Google off saying, oh, you know, their search monopoly is done, blah, blah, blah. No, Amazon is definitely going to flex its muscle next year. And I think if they get the right, the right cadence together with some of their catalysts, then people could re-rate it higher. Not like crazy high, but the expectations on Amazon are low enough to the point where beating the expectations may not be as difficult as people think. And there is a huge amount of margin that they could pick up from their Tranium 3 line that could bode well for them. So
I have two questions for you. So you spoke a little bit about Leo. Mr. Patel, as an ASTS guy, how excited are you that the Indians finally launched the first set of ASTS recent satellites into orbit? And then second, what do you guys think about BM&R finally starting to stake some of the Ethereum?
I'll start off with the Indian space research program that they have. The Indians are really good with space, man. You know, and India's economy is growing at a pretty brisk
No, I mean
pace.
they actually launched ASTS satellites.
Yeah, that's what I'm saying. That
Right.
like the Indian space program itself is a lot more advanced than people think. I think it's a point of national pride for the Indians to launch something like that. You know, the entire country. This is very reminiscent of like how proud the U.S. was of NASA when we finally got to the moon, right? So if you look at the India space program, to some degree, a lot of people actually challenged even why they do it. A lot of Western countries, they're like, oh, you got a starving population, yet you guys are like spending money on your space program, like, you know, and a lot of liberals in India, they're kind of like with that line of thinking saying, why are we even spending money on space exploration when, you know, we've got economic problems at home with regards to, you know, some of the more basic stuff that people need. And the truth of the matter is you kind of have to do both. You can't just say, you know what, we're going to focus nothing but curing all domestic problems while ignoring the future. And I think if you look at it, this has tangible benefits long term for the Indian economy, because just like the space race, when the US got into the space race, it developed all these other technologies that ended up becoming major things like semiconductors, right? So if you think about the space race is what launched all these tertiary industries that became big things. So India is kind of like following in the same process where they're like, oh, you know what, like this high research exploration, all the development, all of these things are going to add to the national value and the brand that India has going forward. So all the technological innovation and stuff, it gets translated. People go to school, people do research, all that stuff is going to India. And so I think India's got a pretty bright future ahead of it. This was like a moment for a lot of Indian people to say, look, even though we are a developing country, we still do have the prowess to do big things, you know? So, and I think to that level, you have to give them a little bit of credit too. I mean, it's not easy for the Indians, because if you look at their budget versus something like here in the US, I think it's probably like one 1/100th of the budget that they're able to launch these things compared to NASA. Like right now, NASA is technically stranded without Elon, if you think about it, which is kind of crazy, right? The US being as wealthy as it is, we're kind of dependent on the good graces of Musk, which is not fun. But yeah, so India's in that process right now, which is a good thing, you know.
No commentary on ASTS?
ASTS. No, the ASTS is doing its thing. They've got their launch cadence, you know, they've got a pretty ambitious launch cadence going forward. And if they're able to successfully deploy their what is it called? Their constellation and start monetizing it, I think the market will recognize it. I do think that some of the valuation might have gone ahead of itself before all the recognition of all that.
Chris, to interject, you recognize that on the 22nd, the Indian Space Research Organization launched a ASTS satellite. Yes.
Yes. Yeah. What's that?
I'm curious because you're like, I'm confused because you're talking about them like, oh, as if they're disparate. Like that was kind of my question, was like, what do you think this is going to do? Like, do you think ASTS is actually getting to a decent cadence? I'm just confused on how you answered the question.
Well, I mean, a couple of things. At least you know that they have other vectors of going to launch things outside of just using SpaceX and Blue Origin, right? Like, is that what was the question? I'm like, are you just asking for my thoughts, or you want?
Well, I asked specifically, like, what did you think of the launch, and you went on a tangent about RSRO. I was very confused. Like, you didn't talk at all about ASTS.
It's a good thing. You know, ASTS didn't lose their giant satellite.
Yeah,
they don't have to build another one. I mean, they have to build other ones, but they didn't have to redo this one, right? Always a good sign to see something work.
Yeah. No. Yeah. Sorry, I was just confused.
Yeah,
it was separate. But yeah, about BM&R staking, what's going on with that? What do you think? What are your thoughts on that?
Finally, you know, I don't even know why they weren't doing it from the get-go, but no, it's good. I mean, if they start developing some cash flow from it, that means that hopefully they have to do less future issuances of equity and instead use that cash flow to buy more Ethereum. And if the price of Ethereum goes up, it's no longer tied to just share issuances. So I think eventually that net premium closes, but if the price of Ethereum rises, then BMNR will go up, right?
Mm-hmm.
So the key here is just how much yield can they possibly get from staking now? That's the real question that everyone needs to ask themselves. Like, and the thing is, the more Ethereum is staked, I think that there's a mechanism in place to basically have Ethereum become deflationary after the Fusaka upgrade, but that's not going to be known at least for some time. So I would say we have to keep our eye on the total number of Ethereum outstanding. And I think that's something that maybe Steve has some more insight on, because after the upgrade, the burn rate should theoretically go up. And if the burn rate goes up and it goes beyond the issuance rate, then the number of Ethereum outstanding is going to be on a decline, which means that the value of Ethereum itself should climb higher. Right, Steve? I mean, that was the goal of Ethereum from the get-go.
Yeah, so a lot of it's going to have to deal with stablecoin throughput because that will increase transaction volume. But based on Ethereum's protocol, it can only issue 1.51% new Ethereum a year. And if transaction volume from stablecoins can exceed that, it becomes a deflationary asset. BMNR is getting paid in Ethereum, which is good because it's just going to increase the amount of Ethereum that they hold. Their staking will compound, which is good. Once again, BMNR is a play on Ethereum. So we need mass adoption for stablecoins. That's the biggest thing for Ethereum in 2026. We need to see MasterCard, PayPal, everybody who's building their stablecoins on Ethereum. We need to see a lot of movement on this.
I mean, look, if you were asking me what some of the risks are with the BMNR theory, is that there, in my opinion, there's probably like three main challenges that Ethereum could run into. Number one is another L1 provider starts to gain popularity and market share, right? Like Cardano or something like that. So, if the stablecoin issuers are like, hey, listen, I don't want to use Ethereum, I want to use something else, then there you go. That means that there's less transactions that are happening on Ethereum. And then all of a sudden now you've got sort of issues, right? So that's the first thing. The other thing is like the cost of transactions. If they somehow get blown out of proportion, then of course it makes people think like, hey, maybe I need to not do it with Ethereum. Maybe I need to do it with something else. And of course, the last thing is just if there's a shift in policy with regards to politicians in the next election cycle that basically kind of reverse some of the stuff with the Genius Act and the what's the other one? The whatever.
It's a Genius Act, and then I can't remember what the acronym is for the other one.
Yeah. So whatever. If those policy decisions get reversed somehow, then we could have another problem. But that one I think is like the lowest risk. I think the biggest risk is just everyone not necessarily finding the greatest amount of value on just being in Ethereum. And there's, and if someone else, like I said, other L1 providers have better technology, then like I said, they could siphon off people off of Ethereum, in which case then you've got some sort of crisis of confidence. And, and Ethereum at the end of the day, there is utility value there versus Bitcoin. So like I said, that's something that's you're just gonna have to wait and let it play out.
Mm-hmm.
Clarity.
Yeah, I mean, the thought with respect to BMNR that I was kind of trying to get after was, so they, for people that don't know, they staked about 75,000 Ethereum that they know of, but there's been reports, but I haven't seen confirmations yet that they're staking more. Bitmine has about $12 billion worth of Ethereum at today's prices, around $2,900 for Ethereum. And so if you think about it, if you're able to stake, and staking is kind of averaged around anywhere between 2 to 3%, maybe slightly more if you're staking on your own, that could lead to over $300 million in revenue, potentially up to $360 million in revenue that's being generated from staking alone. And so that is obviously bullish on a company like on Bitmine. So yeah, very curious to see what ends up happening if they actually start reporting some of this at a broader scale, and actually how it gets accounted for in the balance sheet and in the income statements as well. Would that be considered net interest income if it's being being say, because I know Bitcoin has been able to now be kind of written within the mark-to-market accounting associated with Bitcoin has now been able to be worked into income statements, but I'm not sure if Ethereum is also. And so it kind of gets me thinking if it's one of those things that is so, I don't want to say revolutionary, but forward thinking with respect to what they've been able to do with this Ethereum staking and the ownership in Ethereum, that it doesn't even show up for several quarters, if not several years, until regulatory changes, that they can actually account for it on a GAAP basis for the income statement.
I'm not sure how it's going to get counted. I think it'll be considered interest income because it's generated from staking, which will get classified as interest, I believe. I'm not sure how they're going to account for it in the accounting, but it's also, as far as Tanner said, and he did way more research than I in this, it's coming back as Ethereum, not cash.
Exactly.
So I would have to double check that. But I think at this point, this is something you just, or for me, I'm just going to keep dollar cost averaging in. I bought more Ethereum the other day. I bought more BMNR the other day. And I have no idea if this is going down or up or sideways. But I do think in a year from now, the crypto markets will look different than they do today. It's more an adoption play. Matt, the real question is, you were the one that said you were right out of all of us. So is it time to start acquiring, or you still think we got a little bit ways to go down before you get really interested?
I don't want to say I was right on anything. I mean, I was just
timing wise, you were correct. You said we were going to hit crypto winter, be careful. And as far as I'm concerned, you were the one that wasn't buying when we were. So your timing has been correct.
Yeah, I mean, to me, it's always been I like the idea. I like Tom Lee. I like what they're doing, but I just always thought that crypto was a little bit long in the tooth, and I do think it is going to get worse before it gets better. I mean, I think the end of 2026 the second half of 26 will probably be the opportunity for me to buy. But I do think that this might throw a wrench into my opportunity potentially. It's an uncertainty. I'm going to look after it and see, because if this was strictly a micro strategy, let's say, and it relies only on the value of the underlying asset value, then difficult to be able to say, okay, right now is a good time to buy, because I think the prices are going to continue to go down from here. But if you're actually generating revenue and getting income from that, you could potentially say, and granted, I need to check on what the actual market cap of BMNR is, but if you're able to say they can count that $300 to $400 million of income in, I mean, you're not looking at that crazy of a potential market cap at $12 billion at the current prices. You know, $400 million, let's say, of income. I mean, that's not too absurd, right? I mean, with all due respect, and especially if the value of the Ethereum goes up, so it could be something that blows up in my face and wanting to acquire. But I'm still cautiously optimistic that the value of Ethereum will continue to get hit in the second half of 26, and same thing with Bitcoin. And there's opportunities to pick up that as well as other cryptocurrency related companies in the future.
Yeah,
Chris,
I mean, if you've got no, I'm just selling calls against it, man. That's it. Recycling the calls I have and just licking my wounds. I am probably gonna close my calls and sell it maybe this week, like today or tomorrow. No, tomorrow. Only because I want to make sure I tax loss harvest this thing. And then if I can, I'll probably buy again in February or March. So we'll see. Because you have to do 30 days before, 30 days after. So.
You were in shares or were you in options?
I had shares and spreads. I already closed out my spreads, took that loss. I still have the shares, but I've sold covered calls against them that I'm slowly because they're decaying like crazy right now, which is good.
Yeah.
So just waiting for them. So I'll probably buy them back, take the profit on that, sell the shares, and basically just wait 30 days for the wash sale rules to clear up. So after that, I can buy it in again if I want to. But yeah, like I said, I've got a bunch of gains that I need to offset anyway. So it worked out. It's just I was up by a lot more and worried about more taxes than I'd have to do. And then this whole thing happened. And now I'm like, oh, I still have gains, but not as much, which is not nice.
Mm-hmm.
Yeah. Yeah. For me right now, I'm just looking at the silver thing. I think silver right now is definitely like a very dislocated market. And so these dislocations are awesome to make money on when they reverse. The question is, how do you best play it without getting blown up? Like, how do you do it without getting your face ripped off?
This is going to implode. This is not sustainable at 89. It's not sustainable.
I don't know. This is, like I said, this is the trigger, man. Like, the problem is I'm trying to follow. The one thing I realized, like I need to follow a little bit more George Soros and a little less fundamentals. Do you know what George Soros's philosophy is when it comes to these bubbles? He's like, bubbles form all the time. Whenever I see a bubble, I buy into the bubble and I stoke the bubble as big as it gets. And when there's finally a turn and things are going down, I short the shit out of it and I write it down. So he's just really good at figuring out these things and riding out these waves. So right now, from what I can see, there's no reversal in silver. So this is like anyone who's like, oh yeah, I'm going short at 40, they got ripped off. At 50, they got ripped off. 60, they got ripped off. Now 70. Who am I to say that this thing can't get to 150? Right.
It can, but the problem is, are you going to get out quick enough? That's the problem.
Well, I'm not long on it. I'm chilling right now.
This could be over the next week or two a squeeze, but ultimately these prices are not sustainable for profitability models in manufacturing. Something's going to happen on a political front, geoeconomics, that is going to ease exports or something to make prices come down. Because going from, we were at 50 an ounce, 2 weeks ago? I'm telling you, this is not sustainable. Be very careful with this. A lot of people are sitting on a ridiculous amount of silver. People have been pouring into this trade for years. People have been screaming this a year ago. Watch a ton of silver come back on the market in the next month or two. A lot is going to come back on.
So there's no such thing as a silver shortage.
There's a shortage in the marketplace. There's just not a silver shortage.
A shortage in the marketplace, not an
not actual silver.
Right.
I personally know people. I'm not going to say how many monster boxes, but I'm talking about, if I told you how many monster boxes I know of that people have in storage units, it's crazy.
Yeah. For anybody listening, a monster box is 500 ounces.
Really? Jeez.
Yeah. Oh, yeah. You can barely buy them. I'll bring it up on SD Bullion. Hold on. I know people that were buying monster boxes at $15,000 a monster box. Problem is, it's a bitch to get out of these things.
Yeah, because they're not liquid. Monster boxes? Holy crap.
Yeah, I'm bringing it up for everybody.
Okay.
So right now you can buy a monster box of 2010 Silver Eagles for $46,000. And that's a cash price. That's not credit card. So people stack these fucking things. Like normal people that you wouldn't think of. That's not even the crazy silver heads. This is just people that want to hedge against inflation. When I tell you there's so much silver on the sideline, don't be surprised. I mean, there was one, if you Google at the beginning of this year or at the end of last year, some individual investor bought 10 or 20 million dollars worth of silver from SD Bullion. They live in Texas. It was some woman. Don't remember the name. But this has been something people have been piling into because of the spread against gold.
What is the largest? Because I know they sell monster boxes. Like, what does SD sell, or like AP Max or any of these that's for gold? Like, or do they just sell it mostly by the ounce?
You mean like they sell kilo bars? I mean,
do they sell kilo bars? Wow.
Yeah. So, I mean, we could do a whole fucking bullion podcast. I mean, I'll send you some stuff to really watch. Like, I actually watch this one channel, Yankee Stacking, every week, and I've been watching it for years. They've been calling this, but they also do a show out of a coin shop. I mean, you can buy a kilo bar for 148 grand.
That's insane.
Here's what it looks like. Here, just show the screen. Like there's like a video infomercial. Share audio. There you go.
Where's it from?
U.S. money reserves, I guess. Hold on.
I don't know if we can play this. That's the only thing.
Yeah, I'm gonna share it real quick.
Matt, do you know if we can play this?
Maybe if there's no audio.
There's no audio. I'll keep the audio off.
Yeah, take the audio off.
If you play less than 10 seconds, then
yeah, this is what it looks like. Like literally, they just have like these things stacked in there.
Yeah.
Like this.
Yeah. Precisely.
Yeah. I am telling you that this is whoops.
Oh, we lost.
No, that was me. I hit the wrong thing. There is so much that goes into this. I'm going to once again show. I plugged this last night. I've never met the guy, but I am happy to plug his channel because he's freaking awesome. If you want to learn about silver and gold and bullion, go to this channel.
Yankee
Stacking on YouTube. He's got 209,000 subscribers. The older gentleman, Tim, is right up everybody's alley who follows us. He owns a coin shop. They do a show out of his coin shop. They've been discussing silver and gold, inflation, printing of money, why silver's undervalued. They've been doing this for a long time. They even interview people going in and buying bullion from Tim at his shop. It is truly incredible. There's a couple of channels like this. I happen to think that this channel is the best one.
Do I call him Hot Steve?
Matt, what are you doing? Dark over there? What's going on?
Say again. Yeah, I was gonna say, like, what's going on, Matt? Like,
I was in a room. It was super white. It still is, mostly because of my my laptop, and the sun went down. So don't know what to tell you.
I had the blind closed. I didn't even realize it's pitch black out. Jesus Christ!
That's what I'm saying, Steve. You guys give me crap.
I apologize. I have the blind down. I didn't freaking realize.
I'm in the cab in the middle of the woods.
Oh yes, Fall and Silver Dragons is awesome too. I watch some of his stuff, not nearly as much, but I watch some of his stuff.
So Steve, you don't own a lot of precious metals?
No comment.
All right, you heard here.
Yeah, he owns them, man. He owns Pokemon cards, bro. He's got all sorts of weird obsessions. He streams like 8 times a day now. You know,
Mitt's got to be thinking about buying them out here soon enough.
Silver. All right, guys, I'm gonna head out. I got to do more research on silver.
Solar. He's getting into end phase again.
No,
Chris,
hell
go to Yankee Stacking and put an episode on while you do your research. I'm telling you, they are so on point.
I gotta sleep tonight, so probably not. I'll do it later. Like I said, right now, I gotta stay focused on this silver thing because I think I gotta focus on the silver thing because I think there's money to be made here. So
No, that's what I mean. Like, listen to their show while you do your research.
okay,
Like you will learn so much about it.
is it gonna bias me to the upside?
Dude, they've been calling this shit correctly.
Okay.
It's a big bullion dealer. Like Tim is a very big bullion dealer. I'm telling you.
I'll look it up. Someone's like Amit's uncle's bullish silver. I think he sold out of his position at 45 already.
Did he?
Yeah. I don't know. Yeah, ask Amit, but I'm pretty sure he got out of it from what I heard last time when I was listening. Yeah, let me just do more research on this silver thing.
I mean,
All right,
next
boys.
thing you know, Chris is going to come back and be like, I went to the bank, I bought $10,000 worth of quarters and dimes and nickels, and I sifted through them. I took all the junk silver out and then brought all the coins back. You know, people do that. People have made YouTube channels about sifting through freaking. They buy the boxes of quarters from the bank and they just sift through it and make YouTube videos about it.
Give me 1 second. I'll be right there. Let me show you guys something. 1 second.
We're in trouble now.
We are in trouble now. That's freaking crazy.
Do you have a silver baby Yoda?
I do not.
You should. You should get one.
Silver baby Yoda. That'd be interesting. Do you have a silver baby Yoda?
No comment.
I mean, can I freaking show this? I wonder if I can show this. Can I play a YouTube video, Matt, without the sound for like 10 seconds?
Yeah.
Check this out. So this is that other channel, Silver Dragons. His silver stack after 3.5 years.
It's not enough, Steve.
I mean, I don't know. Chris, look at the screen. Not a lot of silver, right? I'm telling you, people are sitting on so much silver, it's not even funny. Dude's got a bag of silver pellets.
You heard it here first, Steve.
Just saying.
Okay.
Uh,
What? No, it's all right.
Like, people are sitting on so much silver. Do not be surprised. And this video is from 4 years ago. They have been buying this stuff at $10 an ounce or so. A lot of this stuff is going to hit the market.
Chris has a 1964 Kennedy. That's what he's about to show us.
I was I was getting off of the subway. I was walking home and I found a bag of coins, right? And I'm not a coin collector by any means. It was just scattered all over the floor. I just saw a bunch of coins and I was like, all right, let me take, like one of the things about Indian culture is that you're not allowed to step on money. It's called Lakshmi. Like if you step on money, it's bad luck. So I was like, let me just kind of gather all of these things. And I went home and I didn't think of anything of it. And I was just like, whatever. Some of these coins look kind of unique. Let me look at them. And it turns out some of these are actually very rare. I should probably
What do you got
get
there?
them praised. So like this one's a 9. Well, this one's probably not that rare. Let me see. This one looks like it's rare. I don't know if you guys have ever seen this. Hold on. It's a not Thomas Jefferson. Ben Franklin, In God We Trust, and then there's like on the back of it, it's like the Liberty Bell.
Yeah, the $50.
I made it from the 50s, probably.
Yeah.
Maybe early 60s.
Mm-hmm.
Yeah. Yeah. Yeah, there's like a nickel without ridges, like this one. No, I have to like I said, I have to get these like appraised and stuff. But some of these things I looked them up and they're like very rare finds. I'll get them appraised.
When did you find them in the subway? Like 2021, 2022?
Yeah, something like that. Yeah. during COVID. Yeah, there's like a whole bunch of these things. So yeah. Yeah, I have to look at them. I have some of them when I looked at them, just online, they look like they were like rare. And they were getting appraised really high, but I don't know. Like, I really need to appraise these, huh?
Yeah, they sent in this book for years.
Yeah. All right, whatever. Let's put them in there.
Yeah, I mean, it depends on which. Some of them are from the Denver Mint, some of them are San Francisco, some are Philadelphia. So
Yeah,
each of them, depending on what, could be more or less rare.
I've got this Buffalo / Indian like nickel. I don't know if you hold on. Let me see if I can get it close enough. Yeah, it's like a Buffalo and Indian nickel one. It's like I said, yeah.
Smart.
It's a Buffalo nickel. I guess they're not as rare. I just looked it up. Indian head, 1913, rare. Let me see. It's this one. Yeah, I have to look at them up. Like with coins, you have to be very specific. So, like, can you share the screen? If you find something like this,
or whatever there is.
yeah.
No, it's the mint that it got made at. There's a whole bunch of different stuff.
Yeah. It's not as simple as just looking at the coin itself, but if you see that, you can find the type. Yeah.
That's why they pay the big bucks, man.
All right, boys. Have a good one. Take care.
You too. Have a good night with Boss Lady.
By the way, the only silver that I have is check this out. In India, they give these as blessings. Like they're like silver coins that are like symbols of God. And I know my mom has a whole bunch of these. So not that we would ever break it and use it, but yeah.
Now you know.
Yeah.
Yeah, Chris, there's a website, coinstudy.com. You can put everything into, and it'll give you all the prices from the different mints and everything.
Oh, that's cool. All right. Have a good one, guys. Take care.
You too, man.
Bye.
So, Matt, we get into the rare coin business?
Nah, I can't afford it, Steve.
No? All right.
I do want to start buying some kookaburras, though. I like kookaburras, so I might start buying some of those bad boys.
I like it.
And I gotta see how long because my brother-in-law, we walked through his whole, because he's a big silver guy. We walked through his whole stack yesterday, and when were kookaburras started from the Australian Mint? And I don't know, just it's not a lot of money to like buy one or two a year, and so it just doesn't make sense why I wouldn't. But the first kookaburras were in 1990, so maybe I'll go back and buy one from each year. So
thank you very much. Love me donuts. Really appreciate it. BSMT, thank you very much. Appreciate it. Well, Matt, when are you headed back home?
not 100% as of yet.
Like it.
Because while I have the first is kind of what I have to return my rental car, I'm kind of sitting here like, do I go vacation somewhere, or do I just go back home on the first, or do I extend my vacation here, hanging out with friends and family?
Can I interest you in joining our New Year's Eve stream at 8 p.m.?
When is that? Thursday?
Wednesday at 8 p.m.
I don't know if I'd be able to make the whole thing depending on where I'm at. You know what I mean? Like if I'm staying at a friend's house, it'd be kind of weird for me to. So I can't fully commit, but I'd like to do it.
Okay. I mean, you know what you could do? You go to a little place we like to call the Borgata.
You're not wrong, Steve.
I'm just saying, you know?
You're not wrong.
New Year's Eve at the Borgata could be pretty interesting.
You never know, Steve. Yeah, I've thought about it. I don't know what exactly, and then I still haven't booked any tickets back to Houston, so I need to figure that out sooner rather than later.
All right. Well, you're more than welcome to join the stream on Wednesday. Is there anything else you want to discuss today?
So when are we shorting silver?
This week would be the time. My opinion. I'm not doing it. I'm not recommending anybody should do it. Silver is not going to stay at these prices. I don't see how that happens. I mean, I'm bringing up a chart right now. This is the big thing to really look at. The gold to silver ratio is at the lowest point it's been in a long time. I mean, you haven't been here in over a decade with the ratio. And the reason people were screaming this is because it got to the point where gold was 100 times the price of silver. And that's only happened back in 2020 when JP Morgan got accused of spoofing the market. Okay. This is the main indicator of why all the bullion heads and silver heads have been freaking screaming that silver is undervalued. So I would not freaking start getting crazy right now, because at some point people are going to liquidate their silver with it being where it is. I mean, silver's at 81.50. I mean, if you just look at a chart of freaking silver over the past year, you're able to buy silver at $30 an ounce. Like, are you telling me that people are not liquidating on this? I don't know. Maybe I'm using too much logic.
You're a smart man, Steve. Smart man.
Yeah, we'll see. I mean, if silver's the new Palantir, holy shit, that'd be crazy.
Silver's the new Palantir.
That'd be nuts.
What else are you buying, Steve? What else? VG. So how big is VG actually going to be? Is it something you're just dabbling in, so I stop bugging the crap out of you, or is it?
No. Right now, it's a relatively small position that could grow into a modest position. We'll see what happens.
We'll see what happens, and it's not going to be a big position.
No, we'll see what happens, because I'm still buying it. It's fucking freezing in here. I have the window open and it's getting so cold.
See, Steve?
No bueno, Matt. No bueno.
No bueno. No bueno.
No bueno.
I'll tell you what's one thing, what I'm seeing here, Steve, something that might be of interest.
Oh boy.
Is talking about collector value, not necessarily the underlying. What I'm seeing here is in 2025, they basically didn't make any 1 ounce bullion for Mexican silver Libertads.
Interesting.
Because apparently 2022 to 2024, they made a lot of them, but nobody was buying them. So 2025, they said, we're not going to make as many. So if you can find a 2025 and do some more research, this is this Grok that's saying this, but they didn't. Apparently, they're not making any gold Libertats.
Yeah, I'm not surprised.
So, but apparently 2025 they only made 300. So heard it here first, Steve.
Thank you, Treat. Would you be interested in third age pickaxe ores that went up 250% since 2024? I actually have no idea what this is. What is this? I'm gonna Google it. I have no idea what the hell this is.
Wish Steve loved this. Wish Steve.
Oh, this is for. Okay, so RuneScape, rare and variable. There's a place where I draw the line, everybody, and it's called skins for Counter-Strike and this type of stuff. Like, I don't have the capacity to learn about those markets, nor do I understand those markets. I gotta freaking draw a line somewhere.
Steve, you're the best guy I know.
Otherwise, I mean, I went down the Pokemon rabbit hole. I don't think I can get down on the freaking electronic gaming freaking item rabbit hole.
You never know. Steve, what do we buy next?
I don't know. I think QXO is really the play.
It's going to zero, Steve.
It could. It could.
Nah, I think it'll be fine.
You know, I think a lot of companies are going to be fine. I do agree on Amazon. I think Amazon is going to do great. I think it's undervalued here. So I'm more at the point where I'm not looking to take risk on things. Like, I'm open to risk, but I'm not looking for stuff that I know nothing about. I just want to stick with themes I think are going to keep working. And if I think Amazon's going to keep running, why am I going to look for something harder? You know what I mean?
Steve, you got a point.
Well said. Well, Matt, I don't want to tie you up all night. Why don't we end it out?
Some say I want to be tied up, Steve.
If you want to add one more topic, give you one more topic, and then call it in a little bit and get her done.
Well, the one thing I want to continue to remind people of is it's not necessarily about finding the most opportunistic opportunity out there, or the most, how do I say, that's the wrong way to put it, the best opportunity out there. To me, I think it's more about making sure that you're continually saving, continually adding money to the market. That's a better thing to be able to get underway. And will get you much further, I believe, than trying to find the 1 in 1,000 stock that'll go up, and beat the market every single year. One thing that you can do to put yourself ahead of most people is just by having a better savings rate. So I continue to reiterate that. People are always just like, "Oh, Matt must have like some stellar stock performance." Stock performance that I've had isn't actually that great. It's mostly attributed to, and yes, I've had some good winners, Palantir, etc. But there's been years I've underperformed when I was hyper focused on dividends and high yielding stocks and stuff like that than actually price appreciation. So once again, I always just like to remind people that um, having a good savings rate and putting that money to work and growing your net worth and your value in the marketplace is better than just spending it on useless crap. So
sometimes useless crap can be fun, though, Matt.
No, it's 100%. And going to that, I think there's opportunity costs with
Yes.
everything, right? And so if we're talking about opportunity costs and spending money on hobbies, all for that. But the thing that I see most Americans do is they'll have 15 different things that they're interested in, and they'll spend an absorbent amount of money on all 15 things, when in reality, choosing one or two of those things and spending a fraction of the money would make them just as happy. And in fact, I think spending money on the other 13 things actually dilutes the potency of the top two things. So it's not to say don't try things, but you don't need to buy everything, right? Like you can rent something for a day to see if you like it or not. Like just because you think that you might be getting into, let's say hobbying is like shooting guns or something like that and target shooting. You don't need to go and buy a gun. You can rent one for the day, right? Like, so just trying to give people an idea. Like I see so many people that just spend so much money on so many different things that just end up in their garage that they never touch again. So,
moral of the story: live in an apartment so you don't have in a garage to store stuff.
that's Steve's motto. But even collecting watches is not a bad thing. But like if you're gonna collect a watch, buy one that actually
Let's
buy something that appreciates in value rather than something that like is useless, right? I'd rather have one nice watch than, personally me, I'd rather have one nice watch that appreciates in value than 100 watches that look okay and are worthless as soon as I put them on.
yeah, let's be very smart about going down this road. If you're going to get into the watch game or something like that, there are only several brands worth buying, because the rest you're not getting your money out of. And do your research. Now, I know that during the pandemic and even now, there are a lot of channels, a lot of stuff about watches. The reality is most watches are not going to retain their value, and only certain watches go for over retail if you can even get them. So be very careful with that. I've seen too many people try to get into it and they'll go buy a watch for $1,000 or something like that, and it's just not going to hold the value. And they buy them for the wrong reasons. If you want to buy a watch because you like it and you're going to wear it, that's great. But for an investment, be very careful. Please be very careful.
Hot Steve. Myth the legend. What are your thoughts about continuously saving and things like that? Like,
you should.
Do you get frustrated by people putting 1,000 in and wondering why they're not at 1 million tomorrow? Or do you think that people need to think like a millionaire? Oh, we got a visitor again. Think like a millionaire before the numbers show up.
I get annoyed at the whole idea around people should be millionaires at 25. I get annoyed at the idea of I should have enough money to retire at 30. I get annoyed at the idea of everybody wanting a 10x and a 10x and a 10x. It's not realistic. I get annoyed at the idea of people not thinking that if you do 15% in a year, you had a good year. I think a lot of the investors have become spoiled because we've had some really big wins over the past couple of years. Catching a Racket Lab, catching a Palantir, catching a Hood, catching a SoFi, it's not realistic. It's not always going to happen. And I think that people need to think about the idea of continuously saving. Cash is not trash. Like, that's the statement that I hate. I hate cash is trash. Because you know what? Cash is great when markets go down and you're able to buy when everybody else is forced to sell. Cash is king at that point. And I do think that we need to normalize people looking at being 65 when they're 25. And how am I going to build my net worth over 4 decades and not waiting? I mean, a lot of people have made a lot of mistakes and just start trying to get fiscally responsible in their 40s and in their early 50s. And I think that we need to normalize, I'm sorry, but not going to the club, not going and buying a Louis Vuitton purse, not doing this, not doing that. I think we need to normalize putting your future self first and getting good, solid money habits. I don't think that there's enough financial literacy in this country. I just don't.
And then once again, I said it's people are saying like, oh, at some point you have to live. I get that, but there's opportunity cost, right? Like if you're going to spend money on something, spend it on things that are worthwhile. But I see so many people out there being like, prime example is they'll be like, oh, I can't afford a house, blah, blah, blah. It's like, well, you're looking at a $2 million house and you're 22. Like
Right.
it doesn't make sense. Like sometimes you have to eat shit before you're actually deserve to be able to get into some of these things. And I think that most people are rushing and want the end goal without putting in the effort. These are the people that were getting participation trophies, for playing Little League.
Dude, I hate participation trophies.
Steve, you are a participation trophy.
I
Just
fucking
kidding.
hate them. It's like, come on. Not everybody
but-
deserves a trophy. I'm sorry.
Yeah. So, I mean, it's, and I'm not saying don't spend money. I'm saying there's an opportunity cost, right? If you want to spend money, I'm all for that, but don't put it into 15 or 20 different things. Focus on which one you want to put your money into.
Listen, S&P 500 is a great long-term vehicle. I don't think that, and I know you preach it and I preach it a lot, but I don't think enough people really take that to heart and think about, well, if I put X amount in an S&P 500 index fund over 3 decades, reinvest the dividends and let everything compound, I'm going to do pretty freaking good. And I just think it's not normalized enough.
Yeah. Yeah.
I mean, don't look at what I'm doing and think that you should be doing that.
No, Steve's a grumpy gills who lives in New York and doesn't want to leave. So I mean, if that's the lifestyle you want to live, then do what Steve does.
No, that's not what I mean. Like buying Pokemon cards and stuff. Like the only reason I opened that box last night is because I had a feeling that the Charizard was going to come up. I legitimately invest in that stuff as an alternative asset, but it's such a small portion of my portfolio. The majority of it's in S&P 500 index fund.
Mm-hmm.
I mean, a good majority.
Yeah, I would say the most capital I've put into anything is in the S&P. Yeah. Obviously, the things that I have put other money into have done extremely well, and so the S&P 500 is no longer my largest position, but for a long time it was. And we got a visitor. I don't know if they're gonna show their booty hole on camera again, but no, in terms of total capital that I've put into stuff, then yeah, the S&P is definitely the biggest. And yeah, I mean, I hope, I would love to get to, in the short to medium term, 1,000 to 1,500 shares of SPY. I would love that.
Yeah, I mean, look, I think a lot of people that are young fall into the same trap as many people fall into. I mean, not making a lot of money because you're young. I mean, that was me. And going out a lot, not budgeting, and just thinking you have all the time in the world. And a lot of people fall into that trap. And I think that we need to do a better job normalizing, you know what? You don't need to go out 4 or 5 nights a week. You don't need to go to the bar all the time. You don't need to do this. You don't need to do that. Instead, work on a side hustle. Save X amount a week. What you do in your 20s is so important. You can never get that time back. And I get it, where there's just the same way we say opportunity cost with buying things, there's also an opportunity cost with not living your life. And I get that to a degree, but it needs to be normalized, making a future plan so you can retire comfortably. And I think too many people want to be a multi or deca millionaire at 35. And it's just, that's not in the card.
What are you saying, Steve? What are you saying?
Let me say 30. Okay, 30, 25.
30.
I'm not talking about you. I'm talking about in general. Most people are not going to be a deca millionaire at 60, let alone 30. And I just think that we need to stop thinking about what we see on social media and we start seeing with all these things. That's not realistic. And what is realistic is hard work. And that is the most important thing. And after you work your normal job, go grind out a second thing. Work on a side hustle. It's just, I don't know.
I think, a lot of people, this stems from, I think the NFL and seeing all this money come in. A lot of those people, they might end up with the Lambos and the mansions in the short term, but a lot of times they end up with zero. And I think a lot of people don't really understand that. So sometimes it's not about what money comes in, but how you manage it in the long term. And that's something that people need to recognize is, be cautious. I see a lot of people that as soon as they get 200 grand, they could be continuing to invest that in the market and have a really good nest egg started, but instead they go blow it on a Lambo. And part of when I say like when Lambo and stuff like that, it's kind of a joke, right? Like I don't really think of that sort of things, but yeah, most of it is leased, and most of it is just like fake it till you make it, or borrowed and then returned, after a couple years. But another piece as well. What was I going to say? You go ahead, Steve. I had something in my head, but I don't remember what it was going to be.
No, go ahead. Go ahead.
I don't remember what it is. So
Lambos, fake it till you make it, NFL.
I don't remember. I had it and then it slipped away.
I apologize.
No, it wasn't you. It wasn't you. It's slipping away before you said anything.
Well, I think people also need to play around with investment calculator and be like, okay, if I'm 20 and I'm able to put $250 a month, which is a lot of money for a 20-year-old, okay? But if I can put $250 away a month for 45 years and never increase that, at 10% rate of return over 45 years, when you're 65 years old, you will have $2.25 million and only put $135,000 in. I mean, I just, it annoys me when everybody wants that quick hit. It's not realistic. There's no magic science, and too many people don't think about retirement. I mean, if you wait until you're 30 to do this and you only have 35 years, remember this number, 2.25 million. It goes down to $849,000. That first decade is so important for the compounding that people just don't think about it. And it is really annoying.
Mm-hmm.
And then if you get into a position where you're 35 and you're doing really well and you're able to put in $1,000 a month, okay? But now you only have 30 years until you retire. You get to 2. The longer you wait, if you're 40 and you only have 25 years to do it, goes down to 1.2 million. The sooner you start, it doesn't matter if it's $100, $50, whatever you can put in when you're younger. Trust me, from somebody who's been there, you're not going to regret when you're older not going to the bar when you're 21.
Steve, can you do me a favor and put like $2,000 as a starting amount?
Yes.
And nothing for additional contributions.
Yes.
25 years is fine. Do 20% rate of return.
20%?
Yeah.
190 grand.
So that's what I'm trying to tell people. Like, even if you're a mastermind investor and you're able to somehow over 25 years maintain 20% annual returns, you're not going to end up a millionaire. And so that's what I'm trying to say. And then add something stupid like 250 to additional contributions.
Every month, right?
Every month, yeah. There you go.
It is so important.
And that's what I'm trying to tell people, man. Like, everyone's in here trying to get $1,000 in the market and turn it into $1 million. That's so difficult, but just so simple of just even adding something like $50, I guarantee you'll be able to get closer to $1 million. And so it's that sort of mindset shift that I don't think that people really have clicked yet. And if you're able to get that to click, man, I'm telling you. So,
and think about this: if you get to 100 grand and you get there by 35 and you just let it ride without putting anything else in, and you got 30 years at 10%, you will have $1.75 million, most likely. And if we get a period where you get that extra 1% out of it and you get an 11%, you're at 2.3.
Yeah.
I mean, investing is a long-term game, and I get it. People want all the money now so they can go buy a house, they can go buy a car, they can have all the nice fancy things, take the vacations. I got news for everybody. A lot of those things are draining your cash flow. Like I get made fun of that I don't really go on vacation or anything, but I'm perfectly content stacking instead of spending. And I spend, like, I'm not cheap. If I want something, I go buy it. You know what I mean? Like, I don't think twice about if I want to go out to eat, I'm going out to eat.
Can I test the calculator again real quick?
Yeah, what do you want?
So can you start at the 100,000?
Yep.
That's fine. Do a 10% rate of return and $1,000 additional dollars a month.
Okay.
That gets you to 3.8. That's pretty cool. But what about if you do 0 additional contributions and 20% return?
Over 30 years?
Over 30 years. All right, that didn't end up poetic. I was basically trying to say, like, I was trying to think, like, even if you were to say put $1,000 a month in,
the rate of return is the big thing.
Yeah, maybe if you just do 10%, is that what it is?
It's 1.74.
And then what if you add $1,000 a month? I feel like
it's 3.8.
Wait, how did the other one end up at 20% rate of return? Wait, I'm confused. What?
Because you're doubling the compounding effect, and it creates a much bigger S curve.
No. But I meant like, was the first one at 10% rate of return, or was it at 20?
First one was at 10. If you want 20,
no, I don't want 20 at all. Like I wouldn't want to change anything. My thought process is like, oh, I guess I did say that. Yeah,
you did say that.
Basically, I was just trying to get after, like, even if you try to squeak out an additional 2-3 percentage points, then you're probably going to end up in a much better position by just investing $1,000 extra a month.
And look, if you're in a situation where you've saved 100 grand in a retirement account and you got 20 years left and you're able to max out, where are we in 2026 for 401s? Because we were 24,000 in 25.
No, man, I wouldn't be surprised. I mean, Roths are up to 8,000 now, right? Insane.
I mean, look, all I'm saying is investing in the S&P is maybe boring, but your future self will thank you. And we do not talk about this enough, and people do not make a long-term plan enough. They think miraculously they are going to figure it out. They're going to do some risky shit, and it's going to work. I can promise you, the stuff you're seeing on social media, these people are able to live that way because they're making money from social media, or they're borrowing the stuff to make those videos.
No, and I'm not saying that 20-year-olds are the only ones that are going to be successful. I'm saying that you need to be putting money away. It's not just about putting in $0 and expecting to get to $1 million. And I think so many people are hyper focused on they need to get an additional percentage return, when in reality they're not going to beat the S&P 500. And if they do, they might be able to get 1-2% additional. They won't be able to get 20%. If you're 20%, you're better than some of the most well-renowned investors in the world. And
So I got a goal for everybody. This is going to be a stupid goal, but I got a goal for everybody. All right. Are you ready for my stupid goal, Matt?
yes,
This is, look, this is not realistic for a lot of situations. But if you can get, by the time you're 45 years old, okay, 250,000, and you don't put another dollar in at 10% rate of return, by the time you're 65, you'll have over $1.5 million. Make the sacrifices now. Make the sacrifices when you're younger. It is your future self will thank you making the sacrifices. If you're able to get to 500 grand by 45 and you don't put a single dollar in after that, at 10%, you have over 3 million when you go to retire at 65. I mean, that's a nice retirement. I don't need to worry about shit.
yeah,
And here's the crazy part. You're making over 300 grand a year on interest. And yes, you're going to have some down years. This is an average because this is the average rate of the S&P. I'm actually being conservative because the average rate's 11.6 or so. But your up years are going to far supersede your down years. And pulling out 4 to 6%, your nest egg is still going to grow. So make the sacrifices when you're young, because before you know it, you're going to be 50. Trust me, time flies. I'm not there yet. I'm not even near it yet. But
yeah.
time
Some people are
fucking
right
flies.
saying there's no inflation in this calculation, etc. But okay.
Whoops,
You
I'm
getting
sorry.
getting
I
rid of me?
read
You getting rid of me?
Second time I did that. I did to Chris by accident. I did to you.
So yeah, I mean, throw in 2.5% inflation. Like get rid of. You know what I mean? But we're trying to. You're getting all hyper focused on the wrong things. The big things they need to focus on is add more fucking money to the market. Like
Right.
what else are you trying to like? Yeah, you can nitpick this to death and be like, oh well, inflation and is it 2% or 3? And it's like, motherfucker, just add more money to the market. Like I don't know what else I need to be able to say.
Even in an inflationary environment, if you're getting 11% a year compounding, it doesn't fucking matter.
Yeah.
It just doesn't.
And somebody asked earlier, like, should I take money out or sell my stocks and put 20% down or whatever? It's just like, dude, that once again, like the problem with selling stocks is that you ruin that compounding piece. If you're able to borrow and if that 20%, let's just say you had 300 grand and you just need 50 grand to borrow against, and you're going to be adding to it. I would much rather people, and I've done this before, borrow from a 401k or what have you, and make sure that you return that money into the account over, let's just say, 5 years or so, because you're not interrupting that compound, right? You're not, and to me, that's probably going to be better in, say, 10 years time than if you were to just put that 20% down in cash. Because let's just take this example. You're up, let's just say 50% on something you sell. Now you have to pay taxes. You're initiating a capital event or capital tax event, etc. It's like you're kind of in a downward spiral at that point. Like you're then feeding up so many different things that you need to do. So to me, if you're able to borrow, then any interest that you then accrue from that is write-offable. You could write that off on your taxes. So it's almost more beneficial to borrow against yourself and pay it back over time. And if you're going to be borrowing money anyway, why borrow from anyone else than yourself? So anyway, and once again, that's the way I've done things to purchase several of the homes that I've done. But not to say that that's what you need to do, right? I like to do it because it's very simple to do. and it allowed the entire principal amount of my portfolio to continue to appreciate. In the meantime, I was able to purchase the asset that I wanted. So keep that in mind, but also you have to make sure that that feeds into your particular scenario. It doesn't necessarily always have to.
Yeah, and remember, no one person's situation is going to work for somebody else, but the reality is that if you get an average rate of return of 10%, over time, you can have a very large sum of money that most people would kill for in their retirement. And starting younger and making the sacrifices when you're younger is the most important thing. And we just don't do enough trying to teach financial literacy. And we normalize going out, hanging out, wasting money. And I'm not saying don't go to Starbucks. Okay. I am saying, though, think about what you spend money on. Take a month, write down everything you spend money on. Think about how they got you to spend that money and if it was worth it.
Yeah.
That's all.
And some of it's necessary. Obviously, feeding yourself necessary.
Obviously.
But there's so many other things that are coming out of your bank account that I'm sure you signed up for once, you completely forgot about. And if money goes to where attention goes. So if attention's going to something else, money's going to go to it. But if your attention's on your money, you're surely going to find leakages that you can cut off, and it'll have no difference to the value of your life. So just be cautious.
I mean, like, in all seriousness, everyone, and this is lifestyle creep. How many people have spent money on name brand stuff? And I'm not saying don't buy not good quality stuff, but there is a fine line between spending a couple of $100 on a freaking sweater versus 89 or something like that. I'm just saying that there are
Steve's buying nice sweaters.
people who it's just the first thing that came to my mind. I see all these people walking around with these handbags that cost $2,000, $3,000, $4,000. And I'm like, well, where could that money have gone? It's just, I don't know. I think that we have a society that is just, a lot of people are probably wearing more money on their exterior than they have in their bank account. And I think that's a problem.
Yeah, I see that a lot. I think I've told the story about a guy that I saw at Walmart working at like 10 p.m. at night, and he was wearing $250 shoes, which he was making at most, $8 to $9 an hour, I'm sure. So it would have taken him at least 30 hours. So over a week's, about a week's pay to be able to afford shoes like that. But I'm sure that's something that they had prioritized to buy because of how it makes them look. It makes them look rich, but at the end of the day, that money's spent on the shoes and it's not in their bank account where it should be actually earning the money. So,
and look, creating a lifestyle that you're not able to afford does not do you any good by any means.
Trying to be like Steve.
Don't try to be like me. Be better than me.
You hear that? This cat's angry that I'm not spending time with it.
Be better than me. Start younger than I did. Invest younger than I did. There's so much good quality information out there that I can tell you I didn't have. Like, this generation is truly set up for success with the amount of good information out there. Everything was so gate kept back in the day, but now you have access to the greatest information ever.
Like Steve.
Not like me.
But no, seriously, like when I first started on YouTube in 2016, 2017, it's when I legit started making videos, believe it or not. And it's all on my channel if you guys want to go and look. You'll see the complete evolution of the channel. But I mean, there was really only a few people like Jeremy LaFave and a few others. Like it was pretty interesting that there was 0 people at the time. And my hope is that Ryan Scribner, if anybody remembers him. He kind of took a step back after he made some good money, but it was surprising to me that yeah, a lot of people that I started doing YouTube with that were around at the time have done absolutely phenomenally and have grown because the lack of information at the time was so small. So then they provided a need for people. Otherwise, you would have had to like buy Dave Ramsey's course or do God knows what, spend absorbent amounts of money to try to get this financial education. And now you can just get it by going on YouTube. But the thing that I caution you with, though, is everybody has a perspective that may or may not fit for you. And so just always keep that in mind. Like somebody could be a 50-year-old person that's retired, what they're investing in is somebody who's, let's just say your early 20s or whatever, could be completely different. And so make sure, and this is something I told my nephew over the other day. I was like, everybody is going to try to come at you with some sort of perspective that they have, and that perspective is right for them. It's not necessarily right for you. So you have the opportunity with all this free information to listen to a lot of different perspectives, see how that fits into your life, and always try to understand where that person is coming from and what their goals and objectives are. Because if you listen to, say, CNBC or Fox News or what have you, they have an agenda to sell you advertising dollars. So they'll try to do whatever they can to potentially fearmonger you or do whatever to be able to get your eyes and attention so that you continue to watch and get their advertising dollars. Just like Steve and I. But at the end of the day, we like stocks. We're talking to you about stocks. But at the end of the day, yeah, we're on here to talk stocks. And, hopefully some of you guys get some value from that. But at the same time, we're trying to make sure that we're investing appropriately for ourselves. So I feel like we're more aligned with your interests than say somebody else's. But at the end of the day, you just have to be cautious about what these people are saying and where they're going to and what they're coming from. And anybody that says there's a one size fits all sort of way to make money in the stock market is a liar, and you need to stay as far away from them as possible.
Unless they're talking about just putting into an S&P index fund or a total market index fund for 40 years. I mean,
yeah, I would mostly agree with that, depending on who's listening.
Yeah, I mean, look, if you're a young person that's in their 20s, I'm not opposed to you buying individual stocks, but at the same time, a foundational asset of VOO or SPY is so important. So important.
But not everyone is a 20-year-old hot Steve, so we have to make sure that we're communicating across generations.
Yeah, and look, the sooner you can start, the better. And I got all right. So, what's your feeling on Dave Ramsey?
I think for a certain group of people that have trouble with finances and have trouble with managing credit, should listen to him. But I think people like myself, I use debt very regularly and have done very well for myself without over levering myself. But I think I see people out there that are over levering themselves, that are putting them in situations that if things do go wrong, where they could get screwed and they could listen to a little bit of what Dave says. But to each their own, right? Not every situation is like that. But I know a lot of people that have benefited from listening to what Dave says. But they were people that were super into credit card debt, that couldn't understand specifically how to get themselves out of a brown paper bag. And the words that Dave had said helped them. So,
yeah, I think he's got some really good advice. I actually watched a couple of his shows over the past couple of days, and I just think to myself, how the hell did people get in these situations? One of them was they haven't paid taxes to the IRS in God knows how long. It's like, Jesus Christ. But the one thing I don't like is the whole credit card aspect. And the reason I don't like it is because we need to normalize financial literacy and self-control. Credit cards are not bad. Credit cards don't make you buy stuff on credit cards. People need to control their impulses. Credit cards are a great vehicle to utilize if you use them properly. And I think everybody needs to realize they're an adult. They need to make smart financial decisions. And to me, spending cash instead of a credit card is not a smart financial decision because I want my cash back and my points. If I had to spend $100 at the grocery store, why am I going to use a $100 bill when I can use a credit card that gives me 3 to 5% back on groceries? And I get it. Oh, $3 or $5 isn't a lot of money. It's the principle and it's the compounding effect over decades. And the amount of money that you freaking put out lacking take, Steve. Tanner, I disagree with Ramsey a lot on this thing. I mean, I used to be that person that paid cash for everything until my accountant sat me down and said, idiot, you need to put everything on a credit card and pay it off every month. And he wrote out how much money I was losing by not doing that. I'm like, oh shit, I'm being stupid because I just didn't want to see a credit card bill. And then I realized I'll put a 25-cent stick of gum on a credit card if they'll let me.
Heard here first. But Steve, I do have to go spend time with Mama Farley, so
of course,
I appreciate you extending the invite. But I'm going to watch some football and maybe eat something delicious.
I like that. What are you going to eat that's delicious?
No idea. I haven't been downstairs in 3 hours, so
I like it.
I'm trying to be like you, high flyer.
I like it. So I'm going to end it out. Tanner, if you want to come on, I'll give you a link. But when it comes to credit cards, I get it. Things come up and sometimes you can't pay everything off immediately. But as long as you're being smart about it, credit cards don't get people into trouble. People get people into trouble. Impulses get people into trouble. So all I'm saying is if you can control your impulses, it is much smarter to utilize a credit card because you're actually getting money back on money you would have spent anyway.
Rather pay the big bucks, Steve.
Matt, enjoy the rest of the night.
Thank you, sir. Thank you for having me on, and I'll let you know about what is that, Wednesday. Tanner, looking forward to you. I'll be in the chat, but I don't know if I'll be able to listen. So you guys rock. Talk to you guys soon.
All right. And Tanner may be coming on. Yeah, a lot of people can't control themselves, but that's a them problem. You know, people are adults. People need to stop looking at what everybody else is doing and take control of their situations. Silver at 84.28. This shit's going to pump. This shit's going to 100, guys. And then you'll see so much silver come on the market. People do not want, yeah, you're right. People do not want to take responsibility. Tanner just said uno momento. Yeah, I need to get dinner soon. 6:08. Holy shit. Yeah, we end up paying for everybody else's poor decisions, but that's why we need to invest and make sure. June, I did. Funny, listen, I got the best wife in the world. She went and got it for me this morning when I was sleeping. But yeah, I got a text from the milk guy at like 6 a.m. Yes, I got my milk. I actually just had some chocolate milk. You know, love that vitamin D from the milk. Popcorn trade. You'll never hear me tell anybody to use margin. I don't use margin. I don't like when people use margin. I think margin's dumb. So you'll never hear me or see me using margin, talking about margin, saying margin's smart. I don't believe in it. The only thing, a lot of people put margin on accounts is so they are able to implement credit spreads and that type of stuff, because you have to have a margin account for certain types of options. But you can ask anybody that's listened to me, never once has any margin shit come out of my mouth. I don't talk about degen shit with stocks. I am predominantly in large caps. I don't even like looking at small caps. So that's not for me.
Can you hear me?
I can hear you.
I don't know why my camera's going all glitchy.
Why don't you unplug it, plug it back in, have it reset?
I just did. Usually it does that whenever there's 2 camera apps open, but I don't know what the other camera app is.
No, restart your computer?
Yeah, I don't know. Okay. But anyway, I was just going to say, so the part about credit cards being super useful, I completely agree. I don't even have a debit card. I have nothing but credit cards. Because I pay all mine off. I just set them to auto pay. I don't think twice about it. However, whenever you say like people need to be adults and be responsible for their spending, I also think that is, if they don't have impulse control, then them not getting a credit card is their self-control.
Yeah, but that's a cop-out. That's a cop-out.
No, it's not. The people
Yes,
that
it
go to
is.
the grocery store don't. If you have a problem with sweets, you don't buy it at the grocery store. It's not like you keep it in your cupboards and just say, no, I won't eat it. No, you remove it from your house. You remove the credit cards from your wallet. Like, some people have bad self-control things. That's not a cop-out.
It's called being an adult.
I agree, but you know, some people have. Yeah, I don't know what's going on with the camera. You know, not everyone has the same same willpower.
Yeah, I mean, look, all I'm saying is using cash versus using a credit card is not smart. You can get a much greater rate of return over your adult life utilizing credit correctly. And I'm not a proponent of going into debt. I'm not a proponent of buying things that you don't need. At the same time, if you think about how much you spend on an annualized basis, and you start thinking about on an aggregate level getting 2 to 3% back because some areas are higher, some areas are less, over decades, that's a tremendous amount of money. And
but why do you think why do you think the cash back is so high for credit cards?
Oh, I get it. I'm just saying that people need to have self-control and not buy Jordans or Louis Vuitton if they can't afford it, is what I'm saying. Credit cards are a great tool, not to mention you're not going to build credit without a credit card. So,
well, hey, that's not true anymore.
Oh, because of the SoFi card. Okay.
Well, not just the SoFi card, but secured cards in general. There's a lot of companies that like SoFi didn't pioneer it.
Traditionally, you needed a reoccurring monthly payment for a lease, a mortgage, something like that, or a credit card to build credit. But there, you fixed it. But credit is very important. Your credit history is very important. Having a very long, good credit history, very important. And at the end of the day, people need to grow up and be adults. And financial literacy is very important. We should be emphasizing this more and more. It should be a core curriculum in high school.
But I would say Dave Ramsey is a great proponent for financial literacy.
Well, I like Ramsey's ideas. They're outdated, though, several of them. And he's on the wrong side of several things. One of them being, if somebody's going to give you an interest-free loan that you don't need to pay back, you're not going to take it? Shut up.
I don't think that he's telling the truth on that issue. I think that he's trying to be consistent with his brand. And I mean, talk about anyone that's built the biggest financial brand there is. I mean, he's a billionaire. So like, yeah, he's doing well for his company. I don't think that that's a true statement by him. He knows that he can go and buy T-bills and he would be happy doing so. And
yeah, And I think his advice is great. And I think a lot of people should take his advice for most of it. I'm just against this whole thing of if you can't control yourself, don't get a credit card. Learn how to control yourself. Like you're leaving money on the table.
I get it, but the only reason why there is money on the table is because the banks know that there are people that don't have that self-control.
Right.
And so if everyone paid back their credit cards, there would be no cash back.
That needs to be fixed.
I agree, but that's why we have secured credit cards. They come with high cash back. They come with credit building tools, and people don't have to worry about, borrowing someone else's money, because that's what a credit card is. Even if you have the money in the bank, you're borrowing from the bank. It's not your money; it's their money, which is good for fraud protection and stuff like this, using the bank's money rather than yours. But like secured cards all have those exact same benefits. So. I promise you, I am a credit card proponent, but it's not for everyone. Like, yeah. Like, for example, I think going out and having a couple beers or something like this is fine for a large percentage of the population. But then there are some people who might be in AA or something like this, and they just know, like, although some people can get away with a couple drinks, they can't. They don't have that self-control. That's their problem. And there's shopping people with that exact same issue. Whenever money is borrowed to some people, they do not have self-control. Any dollar that comes into their bank account, they spend it. It's not that everyone living paycheck to paycheck has a lower income than some of the savers. A lot of it is just whenever they see money in their account, they spend it. And it's an insane habit, but that's just like, that's the sort of cards that they've been dealt. That's the self-control problems that they have.
But part of the problem is we are not treating financial literacy as a problem. We are making people sit through classes that they're never going to use in high school ever again, instead of making sure that when you're 18 and you come out of high school, that you understand the structure of debt, you understand retirement, you have a mindset of setting yourself up for the rest of your life. We are doing a disservice to so many people, making them come out of high school without understanding the ramifications of taking on student debt or signing up for a credit card at 18 and then just spending money. We do not do enough. And it is all of our faults for not saying enough that the education system needs to change. Now, with Ramsey, I love his 7 baby steps. I would tweak them though, but save $1,000 for your starter emergency fund. I love it. Pay off all debt except for the house using the debt snowball. It's a great idea. 3 to 6 months of expenses, great. Invest 15% of your household income on retirement. Number 4, great. Save for your children's college fund, great. Pay off your home early, great. Build wealth and give, great. I like them all. I would refine them though. And here's how I'd refine them. 1, even though 1,000 may not be enough for a starter fund, it's very important. And it's more of a psychological step about saving. So I would keep that. This is where I vary. Depending on how much debt you have and where it is, I would make rule number 4, rule number 2, which is invest 15%. And I would structure it somewhere along the lines of, if you were in a job where you have a company match, you put in, and I would add a couple of steps and break this down, you refine it even more, where if you're in a job where you have a 3% company match or a 4% company match, you put that in as step number 2 up to that match, so you're not leaving free money on the table. And then go to the debt snowball as rule 3. And then for rule 4, put X amount in your retirement because you never get those years left, and then go into saving 3 to 6 months of expenses, and then whatever the corporate match and then the other portion of it is, have rule 7 as the rest of the spread goes into your retirement, and then go to children's college. Because if you have a job where you're getting a match but you're not saving for retirement, 1, you're never getting those years of compounding back. 2, you're never getting that money back off the table that you're allowing your employer to keep. So these are great steps. They need to be refined more.
What do you think? This is a little off topic, but what do you think about the Invest America
Love
Trump
it.
accounts?
Love it. If I had enough money, I would give $1 billion to it. Like, I love it. I actually have emails that I sent about this 5, 6, 7 years ago. I got drunk one night and rewrote the tax code. I never sent you that email that I sent to Mitt.
No, bro.
Oh, it's hilarious. I forwarded it to Mitt. I sent it to I think I sent it to Chamath, Calacanis, and someone else, maybe Patrick Bet David one night.
Maybe Brad Gerstner.
I didn't send it to Gerstner. No, it was a lot. I mean, you know how I get on fucking X. So no, it was intense. But
that's too funny.
I'll see if I can find it. I hope it's not past 7 years. If I sent it to Amit, I definitely still have it, so I can dig it up. But I love the Trump accounts, and I truly think that you need to do this with $7,000. Every baby born costs you 20 to 25 billion a year, and in 60 years or whatever it is, you will not have Social Security anymore. And every baby will be guaranteed to be a millionaire when they retire, and they are invested in the American economy off the bat, and they will have more national pride, and they will be more inclined to understand business and root for America and want to participate in the system.
Yeah, yeah. No, I've always believed in that. Like, you have these kids coming out of college that have absolutely no assets and are loaded up with student debt, and so of course they want to like restart the system and don't believe that capitalism works because they're not a part of it. They're being used for compound interest. They're not saving to enjoy the compound interest.
Yeah, I need to cut you off for a sec. So there is a comment, well said, well, Steve, if everyone's a millionaire, guess what? That's not what I'm saying. Okay. You need to think about it like this. How much money do we put into Social Security every year? What's the ROI on the money that you are putting into Social Security? Okay. You are never going to get back what you put in over a 40 or 50-year period. The amount of money that our government spends, we are funding Social Security ourselves for our elders. We can fund a $20 billion program from our taxes. And that means that every baby with $1,000 or $7,000, whatever it is, in an S&P index fund will get a much greater rate of return over those 65 years than us putting it into Social Security in T-bills with no rate of return. And it makes sure that people actually have a retirement that they can live off of. It is well worth it. And when you look at from an expenditure standpoint, Social Security is the third or fourth largest cash outlay of the government. If that only needs to be 20 or 25 billion a year, that would be amazing. And it's going to take 60 or 65 years to get there, but it is well worth doing. And then where I'm getting that number is the amount of babies a year is roughly 300,000 or 315,000 babies a year in the US. 7,000 a baby is around 21 to 25 million. 21 to 25 billion.
Yeah. No, I think it's a good system, but I also think it does help people get off on the right foot of like, okay, well, there is a lot of patience needed in order to build this up over time. You're not going to get rich off of $1,000, but after 18 years, you actually have, like, by the time you actually care about these products, that you've built up a sizable chunk. You're invested in the companies that you're using and that, you're potentially trying to tear down in America as companies that you have ownership in. Like, I think it's a great system. I hope Canada ends up implementing a similar solution, but I don't know if that's going to be the case.
Yeah, it would be. I think this is a great thing, and I hope more people in a situation to fund it do fund it. I think it's a worthwhile cause. Really is.
Yeah. Yeah, I don't want to keep you if you've been live for 3 hours. I just wanted to jump on for that credit card thing. See how you're doing.
Are you doing anything on New Year's, sir?
You've asked me a few
Oh
times.
yeah,
now.
you are. You have
Yeah.
a life. That's right.
I'm hosting. Yeah.
That's right. Okay.
Most of the major holidays, I like to get people together. But I'm back to work tomorrow.
I like it. Back to work.
Took the week off streaming for the most part, other than the special streams. Like we did those together for FinTech Friday, our show, which I think remains unnamed. But yeah, what do you call our stream?
I call it FinTech Friday because that's what you call it.
No, on Wednesday.
Oh, all right. I just put Wednesday night stocks with Steve and Tanner.
Yeah. I don't think we've named it.
So I think we can move our show to Tuesday or Thursday since you're not going to be around on Wednesday.
Well, yeah. What day does that fall on?
The 30th or the 1st?
Yeah, 31st I won't really be around, or the 1st because the market's closed. And then all next week I'm gone.
But even all next week you're gone. You just said you're getting back to work tomorrow.
Well, I'm going back to work, but I'm going to CES.
Oh, you're flying out?
Yeah.
When are you flying out?
4th, I think.
Gotcha.
The 4th to the 9th.
Good role model.
Yeah. I got invited by a company, and I'm gonna see all the fun, tech there. And have I told you or no?
I mean, I know who invited you.
Oh, okay. Yeah. Is that public knowledge?
I don't think it's public knowledge. I mean, I don't know who has said it. I don't think anybody said, but I know 2 of you are going.
Okay. I'm excited.
You should be
excited.
excited.
So, I hope to see some other companies there, and what products end up getting shown off, who's going to be there. My favorite thing is meeting the companies that I hold publicly, and then being able to talk to their employees about their experiences, what they've been working on, experience with CEOs, all that sort of stuff. It's just amazing insight into the companies that.
Are you going to stream live from out there?
Most likely, no. I'm going to try to record. I got this little DJI camera that's good for vlogging.
In all seriousness, why don't the 2 of you hire somebody out there just to follow you around?
Well, it'd have to be someone that's going to CES. Because I don't know if there's an amount of seats that.
Oh, okay.
Yeah.
I wasn't thinking for panels or anything. I was just thinking if you could get another badge, you guys hire somebody to actually film, and you could do live shit around the event. That's all.
Yeah. Yeah, so it's still going to be busy. I just want to get back into streaming.
No, you don't. You're over. You're done. You're retired.
Bro. I'm over the holidays. Honestly, I want to get back to just the markets. I want earnings season to be back. I want to get busy again.
Earnings season's in 3 weeks.
I know, and I'm super excited about that. But it's still I've got 2 more weeks of next week is still almost half days essentially. And then the week after that is CES. And then I come home and I've got nothing planned after that. And then it's okay, well, let's sit and watch the markets. And that's honestly what I enjoy. I'm very much a homebody. So, yeah. But when are you going to come out to any of these things?
I don't know. Probably never.
I know you never leave New York.
I don't need to.
I'm asking you to stay in your same country.
I know. At least you're, getting a little closer to getting me to go somewhere. These guys want me to go to Mexico and all these other places.
Yeah. I've just been going back to Vegas every single time. I don't even to be honest, I do not like Vegas.
Sucks. It sucks.
Vegas sucks.
It's horrible.
Yeah, the strip sucks. I've got nothing for it, but it's also super, super cheap for these companies to host conferences there because half the money that the hotel is going to make, if not, 90%.
There's nowhere else to host CES or something like that because you don't have a larger capacity of hotels in such a small square mile radius than anywhere else. And convention centers, I mean, it's amazing.
Yeah. Yeah.
But no, Vegas sucks. I hate it.
Vegas rules. Stop it. No, man. It's I don't know. It's a big gimmick. I don't know how people walk through the doors. You guys pick a hotel. Honestly, obviously, people have their favorites, but they all are stunning. Okay, they're beautiful, immaculate, just unbelievable multi-billion-dollar investments. And you think, okay, well, how are these being funded? They're being funded by the games that are in them, and then people are so excited to go play with those odds. I'd rather sit at home and play the prediction markets. At least I'm, versing my someone else on the other side with my potential information edge than me versus the casino.
Okay, so that's not why it sucks to me.
That's why it sucks to me, bro. It's a hedonistic city.
No,
if you're not into drugs, prostitution, and gambling, it's a waste.
So here's why.
Good food. Great. The best food I've had in the world is in Vegas.
Yeah, here's why I think Vegas sucks. Because there's nothing that I can't do here that I can do in Vegas. Like, I'm not going to shows. I'm not going to clubs. I'm not doing any of that shit. I am getting my room, going to get a steak, drink a glass of wine, shoot some craps, and go to sleep. That's legitimately what I'm doing. I can do that here. I don't need to do that out there. So for me, personally, Vegas sucks because I'm never leaving the hotel. I don't know.
Yeah. Good food, though.
Oh, yeah. I mean, listen, great food. But I have great food in AC when I go.
Great food in AC. Yeah.
And the homestead in freaking AC and the homestead in Vegas are not different.
You know what? I actually love the Vegas weather. I love it dry. I've got no problems. I could live there if it wasn't around the strip. Like, that might be interesting. No income tax or no state
now
tax.
You want to talk about somewhere where I could retire? Oh, I could retire in Vegas. Something to do all the time. Like you said, no income tax. Don't have to worry about snow. Sure, no problem. Growing city healthcare. No problem. But going to Vegas on a trip is not for me.
Babylon. Yeah. I mean, Tanner, if you just said that you would love Austin, Texas. I've never been to Texas, but yeah, I'd like to go. The only time I've ever really been invited to go out to Vegas is just to meet up with people. There hasn't really been an event or anything to go in Texas, so I've just not gone yet, but I'll have to check it out for sure.
Yeah, if Mitt doesn't meet up there, we'll go.
Yeah. No, it's funny. I've been to way more places in the States than I have been in Canada. I've never really traveled Canada at all. And I have no want to. Zero want. Maybe Vancouver. That's it.
Well, you're a good role model, sir.
All right. If you're trying to wrap.
Yeah, I'm going to wrap. I got to make some dinner. I got to finish an article for Seeking Alpha and try to watch some TV.
Banff? That might be a good one. Yeah. No, okay.
Let me know about Tuesday.
Take. What part? I don't even know what you're talking about. The Canada part? Canada's just a bunch of trees, honestly. Everyone looks at the size of Canada. It's Ontario, and then the rest is a forest. I've got
Dude.
Forrest.
Steve, how come you say you're a foodie that never left NYC? Because NYC's got the greatest food you could ever want. Like, live in NYC, grow up in New York, greatest food ever. Just saying.
All right. It's making me want to go live.
You should. Go live.
Maybe I'll go live.
Do it now. He's thinking.
I'll go live.
All right,
I'm
everyone.
not doing 3 hours though, ladies and gentlemen. I want to talk about the week ahead for like an hour.
All right, everyone. Tanner's going to talk about the week ahead. I'm going to get going. Please go to Tanner's channel, and he will entertain you with what is going to happen this week to close out 2025. Maybe he'll even give you some predictions for 2026.
Ooh. Love it.
All right. See everyone later. Have a great night. Tanner, text me. Let me know if you want to do Tuesday.
Cool, man. Yeah.
All
Thanks
right.
for having me on.
Later, everyone. Thank you for joining. Truly appreciate it. Dougie, thank you. June, thank you. Michelle, Ray, Spencer, Chels, ETF. I appreciate all you being here. Thank you so much. I will see everybody tomorrow night. Have a great day. Tanner, enjoy.
Thanks.